Hello and welcome back. Hope you're good, doing well. I hope that you can hear me. Sound is all right. Hear me. So let's move on, guys. So we are having weekly market outlook for from 26 Feb to 1st March. Okay. But before going to look at that, if anyone want to join us looking for training or trade setup or membership, just simply, head to wave-trader.com, check the membership levels, or if you're looking for further information, just simply fill that form and send that to me. Okay, so, and you can follow me on these links. Okay, for that, just simply head to my trading view profile, check the signature box over there, and you can follow me on those links. All right, so there are the links where you can follow me. Okay, and the other thing is that follow me on TikTok. Soon we're gonna have live streaming over there on TikTok. Over there we need 1,000 followers to get a stream access, so please do follow over there. All right, so I haven't posted much on Telegram during this week, during the last week. Yeah, so we, in the previous weekly market outlook, we were anticipating gold to hit that 32, yeah, 2032 mark. So there was a 15-minute opportunity. So that was the only update which I had over there on Telegram. All right, so not much posts over there on Telegram. All right, now let's move and let's look at the setup. So the first setup which I'm looking right now at gonna be the yield. All right, so yield to go down, and bond is just simply setting up for a Treasury bond is just simply setting up for a buy opportunity. Yeah, this is simply setting up for a buy opportunity. So if you trade on that and you have traded previously on this, then you are paying attention on that chart. Yeah, so previously we were having a buy opportunity over there, and we had a nice run over there. Yeah, and in the previous weekly market outlook, we were talking about so we were talking about the buy opportunities over there in the previous weekly market outlook, and we have seen some some decent buying came over there, and it's simply setting up for another opportunity. Yeah, so setting up for a buy. So we are having some data is going to be released for this week. All right, so data are gonna be over there on goods order. Yeah, so today we don't have much data except home sales, and Lagarde is going to speak, national core CPI in the Japan, and durable goods orders, and CB consumer confidence in the US, and tonight on Wednesday so Wednesday on Tuesday night. Yeah, so Wednesday at 12:30 a.m. we are having CPI data on Australian dollar. Yeah, so as we can see that the inflation is sticky in the other countries. Yeah, so highly likely we're gonna have same numbers in the Australia as well. So 3.6 or 3.4. Yeah, so more likely gonna be above 3. Yeah, and rate the CN on New Zealand dollar, we're not gonna have much. Yeah, we're not gonna have much, but we can see that the New Zealand dollar went higher ahead of that event. All right, so So that's what we were looking for, by the way, if you do remember that, in the bigger time frame. Yeah, and you know, this is what we were expecting. So finally it went higher, broke through that channel, the channel which we were anticipating to break out. So broke out last week at this area. So yeah, so we may see further, we'll talk about that. Yeah, so this is what we are anticipating. Yeah, but there is still a chance that price still can drop for another leg lower. All right, so we're going to talk about that later on. So that's going to be the event. And GDP on US, and the most important number going to be on Friday, going to be the core PCE price index monthly basis. Yeah, so that's going to be the data. That's what, you know, the PCE data is important for the Fed rate to see. And I mean the Fed is watching that data. So PCE price index, core PCE. So yeah, that's why if we see, you know, a drop on this data, so the projection is higher than the last month. So if we see that drop in that data on Friday, all right, so we are going to see, you know, strength on bonds, all right, and yields are going to set for draw for another leg lower. Okay, and that's what is the opportunity which I'm looking right now. Right, this is the opportunity which this is the opportunity. Yeah, so the bond feature, the T-bond features are set to rise for another leg higher. All right, so we may see, I'm gonna look at the lower time frame. All right, but this is the opportunity you're gonna look for. So I'm just putting the risk reward ratio just to let you know that what kind of opportunities we may see over there. All right, so not an exact entry place, so something like that kind of move. Okay, go all the way up to this place. All right, so that place, that 134, we can see 134, but that this next leg is you know, the longer term move. All right, but the current move, you are expecting it to go all the way up to this top, previous top. Yeah, and we are having a leading move over there in the gilts. All right, so gilts are, you know, yields on US 2-year, on UK 2-year bonds are has fallen significantly. There we can see that. Okay, we are having a, you know, a significant drop over there. Almost, if I'm gonna pull out my right side, US 2-year yield, US 2-year yield is set to fall. So the PCE data is set to release on Friday. We may see drop on that PCE data. Yeah, and that can drive the yields lower and bonds higher. That's the point. Okay, this is where we can see that the move generated from there. All right, so yields went higher. All right, and there to there. Okay, so on Friday we have seen that the yield dropped on US 2-year, UK 2-year yield has dropped. So there we can see that. And in terms of, you know, this is the retracement I'm looking at, right? And we clearly can see that the UK 2-year government bond yield has dropped from 64 to 4.24, all right, so up to 618. And if I'm gonna pull out my, you know, so we can see that the almost 9% drop has happened over there, or 41 basis point, more than 41. All right, so more than 41 basis point, half a percentage point drop, we can say that has happened over there on 2-year yield. All right, and when we look at the wedge, okay, this, I mean, on pattern formation, so we can see that the wedge has broken out nicely to the downside, and that wedge has also set to break out to the downside. Okay, so there we are expecting a sharp breakdown and the price to fall at least up to 618. All right, so 618 up to this place, and in best case scenario, you know, UK to visit that previous low, and US 2-year yield to also visit that previous low. All right, now this move is telling us that we are about to see drop on dollar. Okay, that's the point here. Okay, the US 2-year yield is, if we see this kind of drop, the drop which we are anticipating on 2-year yield, all right, and this here, like that kind of move is going to appear over here on US 2-year yield. All right, so that means, you know, dollar also gonna fall. All right, and we are having that move already. Dollar is already, you know, weaker against the New Zealand dollar. All right, now this is 2-year yield, and this is also, both are 2-year yields. Okay, but the setup we are anticipating on the future, even, you know, 2-year bonds are also a buy opportunity. 10-year bonds are also a buy opportunity, right? And T bond feature is also a buy opportunity. Yeah. So yeah, so move. I'm looking at the yield right now. Okay, so you are basically, how you're gonna watch it. All right, so you're looking for this previous high to, all right, so price to fall all the way back to that previous low. Yeah, we still can see another push within that ascending wedge. All right, and you're paying attention within these highs and looking for like that. Okay, and the second thing is that we may see a breakout. Okay, like that kind of move you are looking. All right, so the move is already clearly shown on UK 2-year bond. All right, this move, so this is the same move you are looking over there. So now we're gonna go to the T-bond feature. So T-bond feature, I guess the same setup on T-bond feature. So data is slightly delayed. Okay, so previously we had that move here. There was a buy opportunity. Yeah, this buy opportunity. Okay, broke out, went higher all the way back to the top. We clearly can see that if I'm gonna invert that, okay, so the move is already appearing over there. You can see that the wedge has broken out, this wedge. All right, so I'm gonna go to my, all right, so the wedge has already broken out over there. This 2-year yield, 2-year yield is still, you know, still high. So we have seen 40, 42, 43 basis point. Yeah, we're gonna look at the yen. Okay, so yen is at a good place where we can see some good opportunities. We'll talk about the yen. Right, so yen gonna be a buy opportunities. It is at a buy place. We'll talk about that. So like 40, yeah, so yield, 2-year yield dropped from 460 to 440 somewhere on this. All right, so on US 2-year. Okay, so US 2-year, so dropped from 470, we can say that. Okay, so dropped from 470 to 422. So similar kind of move we are anticipating. So drop from 475. All right, so 475 to 475 to match exactly to the UK. Yeah, so 420 or 420.25. All right, so which is exactly all the way up to this previous low and this area. All right, so that kind of move we can see. Yeah, so there on T-bond features. So if I'm gonna pull out, so first let's just pull out that FEB lines, and so the target we are anticipating up to 618 first. All right, 618. like that, or all the way to this previous low. So this is the opportunity. It's just simply setting up over there for a buy. Okay, this opportunity is setting up for a buy over there. So price has already broke out that wedge. All right, and the best thing is that price to pull back all the way back to this previous low. All right, and then you are looking for this to buy here within these areas from this floor. Okay, and looking for it to go all the way back to that high. Okay, if you're not gonna get this floor, this price is not going to pull back up to 118. All right, and not going to pull back all the way up to this, then the current correction which we are having over there. So guys, the YouTube is all right? It seems the stream is okay on YouTube. Just let me know quickly, guys. So okay, so thank you very much. Okay, so what? Okay, so if we don't get that all the way back to that previous low, then then we can clearly see that the price was just keep breaking here. All right, okay, so similar formation we have seen over there. Price broke out and was just keep running or higher. Okay, like this flag broke out, this flag broke out. All right, and price was just keep running higher. So we may see breakout like that over there at the current price, and price can keep running. So if we don't get a pullback all the way back to that previous low for upside, okay, then you are watching these breakouts and the continuation. So where actually you need to pay attention. All right, so these 15-minute corrections, which are just let me move to a slightly bigger time frame. Yeah, so I mean the breakout is pretty sharp. Okay, we may not see the 30-minute or 1 hour pullback. Yeah, so price may not retrace to that much lows, as we can see that the move was pretty sharp on the 2-year yield on UK 2-year gilts. So these are the places where you're paying attention right now. Okay, these correction support areas, price is just trying to hold that. Okay, and looking for a buy over there for upside. These are at the current price, the short term move back to that high, and if it start rising, then continue. If it doesn't hold, then these areas. Okay, these areas where you're paying attention. Yeah, all these pullbacks are watching closely. Okay, and as long as you see that the UK 2-year yield is falling, okay, UK 2-year yield is falling and hitting that previous low, our buy opportunity gonna remain intact on the T-bond futures. Okay, so if this continue to keep falling all the way, I mean, I'm watching it very, very closely. Yeah, so we may see price it can continue to keep falling. Yeah, so targets are clearly being shown on the dollar pairs, that up to which level we can see that the dollar pairs can move for this week. All right, so yeah, this price has already moved. Yeah, this place has tested. So I mean this place means that if I'm gonna look at the date, all right, so 22 Feb lows are being tested this week. Price is going to test 22 Feb lows. So if we see that this is going to break down further to your yield, all right, then you're going to see that the US 2-year yields are also going to visit that previous low, and 10-year yields also going to visit that low. So you are talking about the 30-year yields, all right. So I guess we are having very much similar structure over there on on all these yields charts. Okay, so this is the 10-year yield. Okay, so we are falling from that high, this peak, as 5%. 10-year yields hit the 5% and set to fall towards 2% as inflation is falling. So 2-year yield is also set to fall. Okay, and highly likely we're gonna see that the DXY will also gonna follow that. Okay, now see that the move is already being shown, that up to which level we can see the drop on the dollar index and the other dollar pairs. Yeah, so if I'm gonna pull out the 2-year yield on my UK 2-year yield on my right side, so PCE data, US PCE data can drive that move. Okay, this PCE data, this on Friday, yes, on Friday or Thursday, yeah, Thursday, 29th of March, yeah, so not on Friday. So on Friday we are having ISM manufacturing. So this data, so the PCE data, core PCE price index, if we see that significant drop in this data, all right, so it means that the inflation is falling, yeah, and yields are higher. Inflation trend is going down, inflation is falling, yields gonna also go back to the inflation, yeah, and the yields are currently higher. That's why we have seen, you know, UK is you know, is in recession, all right, technically is in recession, and it's official now, all right, cause the UK 2-year yield to drop, to UK 2-year yield to drop, you know, with 43 basis point, almost half a percentage point has dropped, over a drop we are having on the UK 2-year yields. Okay, so that's leading by the way, at the moment, that we may see drop on the inflation data, and US yields also set to drop. So that's going to be the important watch for this week's, and this data on Thursday at 1:30 p.m. going to be the important data to watch, and that can drive the yields lower. Okay, so if I'm gonna look at that on my right side, and the XY on my left side, and US 10-year yield. All right, so we have seen 618 or 47%. All right, so, or 10% drop there. Okay, so very much similar structure we can see over there at this area. Okay, so dollar started to rise from there at this low and went all the way up to that high. Okay, and similarly US 10-year yields went higher. Okay, this we can see that the 27 December strength, yield started to fall on UK 2-year yield, and now UK 2-year yield is testing this 20 first Feb low, right? And first Feb low comes here on this area. All right, on US 10-year yield, first Feb low comes here. So it means that the US 10-year yield is way high, so it has to go to 3.81. all right, so a big drop can happen over there. All right, and DXY, if not all the way back to this previous low, then at least up to this this first Feb low. DXY is already heading towards that. Okay, and last week we have spoken about that the DXY can drop at this area for the continuation to the downside, and DXY can still continue to keep dragging lower. I see that the DXY is going much lower. Okay, all the way back to this previous low, this previous low, this previous low. Okay, so that's why you're paying attention on 2-year yield. If 2-year yields start falling from 4.25 to 3.96, all right, that means the drop is, the move is set to happen over there. And if I'm gonna pull out my other chart over there, so I'm comparing charts so that you can understand that where you can have that move. Okay, so there we can see, if I'm going to invert that chart, so we were having some strength over there on New Zealand dollar. All right, so similarly in these areas. Okay, so the move started from this low to that high, and the New Zealand dollar has already dropped from this 13 Feb high, all right, and heading towards 618%. yeah, like the move has already been shown over there on UK 2-year yield. All right, so testing broken way below that first. Let me check where is the so way below the first Feb lows. So it has broken that first February lows, and still going down, and we may see more downside all the way back to that low. Okay, and if I'm gonna look at another and if I'm gonna look at on another chart, okay, and that chart has already set to test that high. This is New Zealand dollar and CAD. Okay, if I'm gonna invert that, we can see that. And we were talking about that chart for a buy opportunity, yeah, when price was falling within these areas in the previous weekly market outlooks. All right, this broke out and testing that high, so is also a sign that the move is set to happen for the downside on the yields and on dollar too. Okay, so the starting date same. All right, so let's start from there and this. Okay, so we already moved from there to there, and we have broken below 61%. All right, and testing that previous high, right, and this move set to happen over there for the downside. Okay, we already got that move on Kiwi against the CAD. So strength on Kiwi is a sign that the risk on move is happening over there. Hopefully you understand that point, guys. Yeah, so a nice comparison to understand that where is the move. Okay, so the US 10-year yield is also set to fall. Okay, and someone was asking about the US 30-year yield. Okay, so let me look at that quickly. All right, now what do you see here? What do you see on this chart? I have explained to you that the other charts, or the currencies, I have explained to you currencies, what currencies, set to, are going to do. Yeah, so the analysis. So now you understand that up to which level you are expecting US 30-year yields to go. All right, so in best case scenario, 30-year bonds to rise, and the US 30-year yields to keep falling all the way up to this first Feb low, or all the way back to this previous low. All right, this is the first Feb low, and this is the 20 December low. All right, and we have already seen that the wedges broken out over there on US 30-year yield as well. Okay, and price is just simply set to continue. If I'm gonna pull out my Kiwi CAD chart on my right side and pull out that, okay, now what do you see here? Okay, hopefully you see that clearly now. So Kiwi CAD is testing this low, right? About to test that low, right? This previous low on 27 December low, right? Set to test that. And where was the previous high? All right, this high. All right, or let's pull out that high. Okay, this high. All right, this area. So we can see clearly that the retracement still has to happen over there on US 30-year yield. All right, so we have gone lower than the 70%, all right, or gone higher on the Kiwi against the CAD. Yeah, I have just inverted the chart and set to test that low. So what we are expecting over there on US 30-year yield to do, all right, so not do this. All right, this is the leading move which we are having over there. So leading move is the strength on the New Zealand dollar, and this is a risk on currency, risk on currency telling us that the risk on move is set to happen. I mean, the dollar is set to go down, all right, and yields, yields to go down, and bonds, to play as a safe haven. At I mean, when you're gonna see drop on dollar, you will automatically gonna see the bonds gonna go higher and yields gonna go lower. Yeah, bonds gonna play as a safety. So that's what you are looking, okay, this move to happen. Okay, that's a correlation which is just set to play out, all right, and yeah, Okay, so the chart which I have already shown at the started, gonna be a buy opportunity on the T-bond features. All right, and this analysis, the analysis which I have made over there, yeah, so gonna, you know, set the tone for the rest of the weekly market outlook. All right, what we may see on the rest of the weekly market outlook, I mean on the rest of the market. All right, so dollar set to drop simply, and yields to drop too. Okay, and bonds to go higher, dollar to go down, and risk on currencies to go higher. All right, and equities to just keep pushing more higher. Yeah, so lower PCE data, I mean weaker PCE numbers, also gonna push the equities to stay intact for more upside. Okay, continue to keep pushing more higher. Yeah, so this is the opportunity where we're gonna look for buy. All right, okay, so if I'm gonna pull out my UK, I mean GB 02 year on it, and gonna invert that chart. Okay, so nice, you know, move over there, and that's what you're looking, that move to continue. All right, there we can see that a nice sharp aggressive move has happened over there on the, and testing that low, and the T-bond feature is still at lower, and it can catch up. Okay, now let's move on to the others. Okay, so this is what we are anticipating. Okay, and if I'm gonna go to my this chart, okay, you can see that my this chart plays out really well, really nicely, went higher, and the formation was very much similar on the Kiwi CAD. Okay, Kiwi CAD also same formation, same structure, but it took some time to break out that wedge. All right, that wedge for upside. So same structure was there, and the same structure was here on the DXY. Okay, DXY also took some time at that top. All right, and updates were there. So okay, so euro dollar update was there, and DXY update, the recent one. All right, and this is what's happening right now. The DXY is going down, euro is, you know, pushing higher from these lows. So if I'm gonna go back to the DXY, and then we're gonna start looking at the others. All right, so the DXY is falling. Yeah, so this is what so where is my first Feb lows? All right, this is my first Feb lows. All right, this is the first Feb lows. All right, so it's still, and this is the 27 December lows, or 28 or 27. Okay, so up to all right, this is the first, continue to keep falling. All right, or in best case scenario, all the way back to that previous low. Okay, so if I'm gonna pull out my 2-year yield again on it, UK 2-year yield, okay, we can see that the 2-year yield is nicely dropped over there. Okay, and we may see significant sell-off over there on the, that's why DXY is not falling at the moment, because US yields are still strong, still high. Okay, and once we're gonna see that the yields are going down, US yields are going down, we're gonna see the dollar also gonna continue to keep dragging lower. Okay, so what on DXY? Okay, but yes, in case, you know, if, you know, these numbers are not going to surprise to the downside, are going to be very strong, let's say above that 0.4%, all right, then, you know, we can expect, you know, another leg higher over there. Okay, the leg which I'm showing over there within that channel, one more leg higher can happen over there, all the way back to that previous top. All right, but that's not going to change the bigger picture for more downside. All right, okay, so that in that case, in that scenario, we need to see a clear, sharp, aggressive breakout over there like that. Okay, clear, aggressive breakout to happen, and then price to continue to keep rising for upside all the way back to that high. So need a clear, strong, aggressive breakout for buy opportunity. All right, we don't have that, as we can see that the yields are falling, and you know, just simply, let me pull out, go to further lower time frame. Okay, so price to just simply stay below those moving averages and keep falling slowly the way they are doing right now. stay intact. Okay, we can see that the buyers are not in control. Momentum is not strong over there on the MACD, and price is just staying below those moving averages and continue to keep falling. So similarly, price to stay below those moving averages, okay, and continue to keep falling like that, okay, and pull back and continue to keep falling, pull back and continue to keep falling, and moving averages to stay above the price. All right, and continue to keep falling. Yeah, so currently price is breaking this flag. There was a short-term sell opportunity was appearing over there. The previous one was here at this area. In the previous weekly market outlook, we were talking about this flag. Yeah, if you remember that, we had a sell setup over there. Sell signal was appearing on the MACD, broke that lag. Okay, another flag appear, broken down. Yeah, so similarly, price to fall aggressively, okay, and then pull back and watch a signal over there, and price to stay below the moving averages and continue. Okay, once you see that the aggressive break, as I said, that the aggressive move happen over there above the moving averages, all right, then you can change your, I mean, you need data for that move to happen. Okay, if that data is going to happen, then okay, then another leg higher within that channel. All right, so if I'm gonna, you know, post that chart on my you know, on my, you know, TV trading view profile, so that you guys can, you know, remember that what you are expecting on the DXY. All right, so hopefully you remember the bigger weekly time frame, okay, or bigger. I will look at that in quickly on the DXY. Okay, that's what you are expecting. Another leg higher is possible. So the bigger time frame on a weekly time frame is that the price is falling from that high, right? So we are going down from that high, and we're expecting a bigger cyclical drop on the dollar index for downside. All right, that's a bigger cyclical move we are expecting. And here within this area, a possible, you know, contracting triangle is information. We can see that. All right, so contracting triangle, another leg higher can appear over there like this. Okay, another contracting triangle before we're gonna head to the downside. All right, so that's a bigger, you know, formation. So if the rest of the charts needs to be inverted, right? Euro dollar just needs to be inverted. All right, so euro dollar first, and then I'm going to talk about the Dollar-CAD. All right, so euro is also pushing higher, just need to invert them. I don't think I need to make my case now that what we are looking. Okay, so yields 20 December low, we can see there yields. Okay, so this is at 23rd or 28th December low. Where is my first Feb low or high? Okay, I have just inverted my chart. So just, you know, just saying that, guys, so that you can understand that lows, so that you can understand that the yield concept which I have made at start. All right, you can see that it has already tested the first Feb low, right? And here is a short-term buy opportunity. Okay, and similarly stay above the 1 hour moving averages, and the trend to stay intact on MACD on 1 hour time frame. Okay, and price to just continue to keep falling to the downside. Okay, so what is the lead? What lead we are having on this currency to continue to keep rising is this. Okay, so this chart is, we need to invert that chart. All right, so we are having a nice lead over there. So if you remember my old charts, then you understand that where euro needs to head in coming days or coming weeks. All right, so continue to keep falling, euro to continue to keep falling, as we are having strength on the New Zealand dollar. New Zealand dollar is leading us that what's going to happen. So New Zealand dollar is testing this low, set to test that low. All right, and euro is still has to continue to keep falling all the way back to that previous low. All right, in case if we are going to see, you know, a different data, all right, one more leg higher back to that lower, okay, on the euro dollar, and again from that to continue to keep pushing lower. All right, do not discount that one more. Okay, still possible. We cannot rule out that. In case if we are wrong, then you know, you understand the bigger structure, you understand the bigger picture. Still gonna be a buy opportunity on euro dollar from the lows. Okay, I need to yeah. I right now I don't see that is going to happen. Last week there was a possibility, okay, but I right now I don't see. I only see that the price gonna, you know, let's put Kiwi CAD for another time on it. All right, there we can see that. We can see that the Kiwi CAD has gone higher nicely. Okay, what I see that the euro gonna keep pushing higher. All right, slowly the way it is doing right now, it's gonna keep pushing higher for upside. All right, and gonna catch up the Kiwi CAD. All right, so if it doesn't catch up, still drop. All right, so short term a sell opportunity, you guys, you can trade, okay, but you know, we're still gonna stick to the same picture. All right, the picture which we were having here, not this. All right, this chart, not this. The DXY, I have just updated this chart. Right, that trade. Right, like the way we were, you know, looking for buys every time and euro was coming at the lows. Okay, like this chart. So looking for the move to go all the way up to 1.11. Okay, these updates were there, and the recent move we had that. Okay, this move. So we are going higher since hitting that low and this new low formed over there. Okay, and I'm expecting it to. So this is the bigger picture, 4-hour time frame picture. Okay, now we need to look at the lower time frame to trade. Okay, so just need to go 1-hour time frame. Okay, so it's all, I mean, just need to, it's already breaking higher. Okay, now the opportunity gonna be over there on some other pairs. All right, so we're gonna talk about that. Like the Australian dollar, we can see that it's still sitting below the moving averages. Okay, and euro is above the moving averages. Do you see there? All right, so euro is holding the moving averages and heading higher for the next leg, heading towards that high. So opportunity is already is appearing over there. So I mean, opportunity is gone here. All right, the buy opportunity has gone here on the euro dollar from this low. All right, this opportunity is already heading higher. All right, this opportunity is also heading back to that target, or in best case scenario, first Feb high. All right, this is the first February top, or second to February top, let's say. All right, and the longer term target or medium term target gonna be the 28 December high, which is at that top. All right, like we have seen on the UK 2-year yield. Okay, so this is gone. Okay, this is gone. This opportunity is gone, but the opportunity is still sitting over there. So same chart. I don't think so. Let's quickly look at this. Okay, there you are paying attention on this chart. All right, so look for 1-to-1 first. All right, use a reasonable stop loss just behind that. All right, this is a 1-hour time frame. I'm talking about the 1-hour time frame right now. All right, and clone. All right, these are the target you are looking for short term. Okay, and in best case scenario, continue to keep rising all the way back to, where is the first Feb? All right, and there is the 2nd February. All right, this is the 2nd February top. All right, and this is the 2nd February top, and you're looking at to hit the 2nd February top first. And if I'm gonna pull out my Kiwi CAD chart, all right, and the longer term target gonna be that previous high, 28 December high. Understand that? This 28, 29 December highs, all right, and this target. Okay, so let's say if we don't get that continuation, all right, this is a continuation trade I'm talking about right now, and we are going another leg lower, which I'm not anticipating at the moment, but if we are wrong and we are going to see another leg lower, okay, so this bigger picture still not going to change. We're still gonna be, we'll keep looking for buy. I think I do have a chart over there. If not, then I have already shown you that in the weekly market outlook, in the previous weekly market outlook, the formation, the wedge. Okay, but I guess I have posted that on Telegram. All right, this wedge. Okay, so finally kiwi was rising from the lows. Okay, kiwi is just simply heading towards that high. All right, now this update. All right, and I guess we do have the Australian dollar chart as well. All right, so I have posted that in my room, so not sure. The Australian dollar, I have posted that. So we were looking for reversal on the Australian dollar chart. Okay, so yeah, both charts are same: New Zealand dollar US dollar and Australian dollar US dollar. So you looking, I mean, euro was also same. All right, so if it tests that low, still gonna be a buy. Last time we were expecting it to go higher from, I guess, within these areas. Okay, within these areas, yeah, this area, and we got that, and CPI data dropped but another leg lower, and then we found it, our floor over there. Okay, so if we don't get that move, the continuation move, which I'm talking about right now, and we are going for another leg lower and testing the previous low again, all right, then we are still gonna be a bullish. Okay, so where is the lead? Okay, so lead is clearly, you guys can see there that the New Zealand dollar against the CAD has gone. So New Zealand dollar is getting stronger against the CAD, is a sign, all right, so that the money is moving away from CAD, all right, but money is not moving away from the dollar, right? So money, gonna start flowing out from the dollar. Dollar is the next. So that's what you are looking. Hopefully you understand that. So for today, for now, the setup is this is the setup, all right? This is the setup you are watching closely at this place, all right? That's the setup. This is the setup you are watching. So from this previous low to that previous high, this is the target. This is the target you are watching right now. Okay, the move has already happened over there on your euro dollar chart. See that? Euro dollar is already heading higher from the moving averages. And we can see that the percentage wise that the move has happened over there, 0.3%, all right, 0.3% move has happened over there, but the Australian dollar hasn't moved yet at all. Yeah, so only 0.13. Yeah, so we can see the move here as well, if you guys clearly can see there. All right, so if you see here, all right, so there we can see that on a US dollar, a euro dollar, so I mean 0.3%, all right, or we can say that 32 pip move has happened over there, all right, but the Australian dollar is negative. Australian dollar is negative, all right, negative 10 pip, and similarly the New Zealand dollar is negative 20 pip. All right, so these two currencies are set to rise, and the pound is also moved higher with 20 pip, a point 18, yeah, and they are down. So the opportunities you're gonna see over here on these two charts. Yeah, so you're paying attention over there on the Australian dollar, and it is set to rise, and for short term one more leg higher is. So similarly the New Zealand dollar, okay, New Zealand dollar has also gone higher, all right, and still hold, I mean, price is still below the moving averages, so still a continuation trade is just simply appearing over there on this 1 hour time frame. Okay, I'm going to talk about the 1 hour time frame, then we'll talk about the bigger time frame. All right, so this continuation to continue. All right, so price to hold that low, and you are looking that low to play out. All right, and this is going to be your target. All right, and as I said, yeah, so same analysis, nothing new. If I'm going to pull out my cross line and find out the 2nd February top is there and 28th December top is there. All right, and we already gone through that 1st Feb high, right, and now set to continue to keep rising all the way up to 28th December high. Okay, so 28th December top to be tagged. All right, and if I'm going to pull on my New Zealand dollar CAD chart, all right, so New Zealand dollar and CAD chart, well, close to that top, and the Kiwi CAD chart has to tag that 28th December. Okay, so this is the opportunity. Okay, this lag, I mean, so this has moved aggressively. There you see that the Kiwi has moved aggressively, but it hasn't moved aggressively here. Okay, but this is the opportunity you are looking for. All right, so and what is the other possibility? I said that if we are not going to see that this move to continue to keep rising all the way back to that high, right? This is what, by the way, what we are anticipating right now. Okay, this hit that top 20th December high, and in case if we are going to see another leg lower, okay, this one more leg lower, so still going to be a buy opportunity. I'm not counting on this at this week. All right, this move, I don't see that is going to happen, but make sure you guys are prepared that in case if drop is going to happen, then we still gonna be we still can have a sell up, we still can get a sell opportunity. Okay, back to that low. If this is going to happen, you still can have, it is still going to be a tradable. All right, right now we don't have that sign for drop. We are only having sign for more upside, and that's what we are looking. But in case if we don't get right, okay, and price start falling, still going to be a tradable. You just need to find out which pair is just leading you that drop. You need to look at the market and need to understand that which pair, where we're going to have that lead. All right, right now we don't have lead for another leg lower, so we're going to stick to the more upside as market is just simply showing right now. Okay, so Dollar-CAD, all right, Dollar-CAD to go down, all right, Dollar-CAD to go down. So Dollar-CAD, is struggling, all right, but the longer term picture is still bullish. We are still expecting Dollar-CAD to go all the way back to that high. Okay, but on lower time frame we still can see another leg lower. So the current move you are looking for is the drop from current price simply. All right, okay, so if I'm gonna simply pull out my euro dollar chart, and the trade is already being shown over there. So where Dollar-CAD supposed to be, yeah, we can see that the euro dollar is heading towards that previous low. Okay, and the previous low is here. So where Dollar-CAD supposed to be, Dollar-CAD shouldn't be over there. Okay, Dollar-CAD supposed to be over here at this area where then you're gonna see the balance. This is actually, when one okay, so I'm in a different way. Let's talk in a different way. So dollar, okay, dollar is moving against these currencies. Dollar, euro dollar, all right, euro dollar, pound dollar, CAD, dollar CAD, Australian dollar, New Zealand dollar, all right. So when one moves, okay, when one pair moves, that is going to tell you that what's going to happen to the others, all right. So you're gonna have move on these majors like major currencies like minor currencies. If one moves, other has to move too to keep the balance in the market. All right, so keep the balance of the dollar. All right, you're not gonna see like the way we have seen weaknesses on the yen. You're not going to see weaknesses that way on the euro or pound or Australian dollar or CAD, right? So these currencies have to remain to balance, to keep the dollar, in check. All right. So that's what you are looking, by the way, right now, to dollar to fall. All right. Okay. In case again we are wrong, top drop, right? But right now I have just shown you what you are looking. Okay, one more leg lower from the current price at this area, that place. Okay, and looking for this move to happen. So put your stop there and look for 1-to-1 target first. Okay, I'm just putting it on, so not exactly showing you where you need to get in. Okay, so you need to watch price to get in. Okay, and this target and all the way back to that previous low, or in best case scenario continue to keep falling. So this is what you're watching, and a risk on move to happen. Sound is okay, so no sound is over there. That's strange. Do you hear me? Do you hear me on now on TradingView on TV? I can see that the mic is working from my end, and I guess that there is a sound. No sound. Still no sound. I can see that the sound is there. I can see that the sound is there. Okay, thank you very much. Yeah, thank you very much. Maybe we don't have sound earlier. All right. Okay, so that's what you are looking. Euro dollar gone higher. Pound dollar is also gone higher. Okay, last week we were talking about that. Still another leg lower can happen over there. Okay, so I'm slightly going to change that. This is not a best pair at the moment, to be honest, to trade. All right, but again, same analysis. 28 December high. The 28 December. There, all right. So that's 28 December. So yeah, so pound gonna stay within this mess for a while. Okay, and yeah, so just continue to keep rising, or we still can see another leg lower. Let me draw some trend lines over there so that you guys can see. Okay, so where is the 28 December high? There, and the 1st Feb. Yeah, there is this 2nd February top. All right, and if I'm gonna draw some trend lines on that, right, and find some formations, these are the formations. All right, and a kind of flag is just simply appearing over there for another breakout. We can say that. Okay, so if dollar is going to get stronger, all right, so pound dollar going to be at a good spot to trade to the downside. Thanks for telling. Yeah, so now I guess now you're having sound. Thanks for telling. Okay, so we are having, yeah, so like this. All right, so continue, break through that top, or another leg lower. Okay, and in a best case scenario to visit that previous high. All right, so I mean, this is a formation. Last time we were talking about for another leg lower. All right, but the drop which we have seen on the yields, so technically the drop on the US yields should drag pound lower. Okay, but that's not the case here. It's I mean, the drop has already happened here because of the recession we have, called by the UK, officially recession called. Okay, that drop has happened over there from this to this low, and then again, I mean, CPI data dropped, and all those news played out. No, now we need to look at the dollar. Okay, so another leg lower. So this is the flag which can break up. Okay, but you don't have a perfect opportunity right now on it. All right. Okay, so 1 hour time frame trade has already happened over there at this area, that low, and pushing higher, and can continue to keep rising. So there is so much, resistance areas. Okay, and price again may struggle. So that's why you shouldn't chase that continuation trade for more upside. Yeah, and I don't see a perfect continuation trade over there unless we see that the dollar is going to gain again. Then you are, looking to start selling it again from these resistance areas for another leg lower. Okay, so yeah, I don't see an opportunity over there right now. Okay, but what I see is that the flag is just simply developing over there. All right, which can break out for upside, and in case if we see that the dollar is going to gain, all right, then you are looking these resistance to play out for another leg lower. Otherwise, as shown on other pairs for 1 hour time frame move, that is already happening over there. Okay, and there, that move is already happening over there. We are having breakout, and if in case if another leg lower coming down, prices testing that support area, all right, and then short-term sell opportunity from that top, and again, okay, this is going to be a counter trend move. As I said, that we are bullish on the risk on currencies and bearish on the dollar. Okay, that this can break out and continue. So this flat formation, this support area, the previous support area, can give you a. So I'm drawing, by those who are watching me on Trading View, guys, I'm drawing on my charts. All right, so you may not see my drawing on charts. I'm actually drawing. But those who are watching me on YouTube, they can see my drawing, or watching me on yeah, they can see my drawing, guys. So this is what we are. This is the formation. Yeah, pound, Australian dollar, New Zealand dollar, dollar chief. Okay, same like the previous week. We are expecting it to go down, and we still may see another leg lower. Okay, same analysis like last week. We don't have much change on this chart since last week. Okay, 28th December low, 1st Feb low, 2nd February low, this area. All right, so if I'm gonna pull out this chart, invert that, and let's see where it is showing. Okay, this chart is well ahead. We can see that the Kiwi CAD is well ahead. Okay, or if I'm gonna pull out the UK 2-year yield again, see what that this is. Yeah, UK 2-year yield is showing us that we are going to see a very, very sharp drop set to happen over there. All right, so yeah, that's what you are looking simply. Yeah, so the sell opportunity still to happen over there on dollar against the. So again, same trade. Okay, this target on lower time frame like euro dollar. All right, euro dollar has already, is already falling. So stop behind that and clone. All right, so this is where I'm setting target in this area. All right, or 2nd February. All right, that low, or in longer term. Okay, so 28th December lows. Yeah, so you see that. So I said at the starting that the 2-year yield is gonna set the tone for the rest of the weekly market outlook charts. Okay, there we can see that the dollar chief is also telling us that you should look for it to continue to keep falling towards the 2nd February lows. All right, or in best case scenario 28th December lows, guys. Okay, so it's already pushing lower. Yeah, or if I'm gonna, let's see, pull out the moving averages. All right, and gonna invert that chart and gonna look at the euro dollar on my right side. Okay, this is the euro dollar also pushing higher, heading highs. Okay, so dollar chief's supposed to be here at that high. Okay, and where the euro dollar is heading. Okay, this high. So it's already moved away from that low. So if pull back, okay, you are still looking for that move. So for short term and bigger time frame, all shown. All right, so same analysis like last week. Okay, we haven't seen much change on this chart. Okay, so in case if you see that the price tag that top, right, tag that top, and so as long as you see that the yields are falling, okay, dollar to go down. Yeah, got it, hopefully. Okay, so pound CAD on the other side. Yeah, last week, well, what we were talking about this expanding triangle formation and one more leg higher from this previous low. All right, this one more leg and then one and drop all the way. But as we can see that the yields have changed their phase. Okay, so again we can expect these two phase to change their phase too. Yeah, so let me find the dates again. So we have already broken through the top of 2nd February at this area, okay, and December, November, okay, so it went higher earlier than the December. So December high was somewhere here at these areas. So yeah, continue to keep rising all the way back to that high, okay, and then again you are watching chart the way chart is showing. All right, so this to go to the high, test the top, and then start falling from that top. All right, so pound New Zealand dollar also dropped. All right, and we still can see that this chart can continue to keep dragging lower. Okay, last week we had that formation, but this week we are, again, let me remove those arrows. Okay, so price is still going down, and if I'm going to pull out the Kiwi CAD on it, okay, I'm going to invert that chart. Right, so we still can see same chart, very much same. All right, so these lows, 28 December lows, and we already broken the 2nd February lows. All right, and we are expecting this to tag that low. All right, and pound Kiwi to keep falling. All right, and continue to keep dragging lower this target first. All right, and in best case scenario continue to keep falling. So if I'm going to pull out my moving averages on that, and that's where you're paying attention. All right, so you're paying attention at this area. You're not looking for this to MACD to continue to keep rising, okay, and price to stay below that 4-hour time frame moving averages, and next leg to happen to the downside. You are watching it specifically during the New Zealand rate the CN, okay, so the Kiwi rate the CN. This is where you are paying attention. Okay, and watching for this move. Okay, first that move, and in best case scenario all the way back to that previous low. Okay, price to stay below the 4-hour moving averages and continue to keep dragging lower. Pound Australian dollar also going to be similar. All right, so this is the same structure we had last week. All right, and the same again. All right, so slightly push more higher, and you are looking for a drop on it. Okay, so I think this is the best. All right, this is the best, so chart for understanding. All right, so the Kiwi is simply heading higher, Kiwi CAD. All right, but pound Australian dollar is still not going after the pound. So we can see that the New Zealand dollar is getting strong. Okay, so New Zealand dollar, we're gonna look at the Bitcoin. So New Zealand dollar is getting strong, but Australian dollar is not getting strong. All right, so that's where you're paying attention, by the way, the Australian dollar to get strong. Yeah, that's the point. So there's going to be a buy opportunity on the Australian dollar CAD as well, right? So buy opportunity on the Australian dollar CAD as well. So similarly, the sell opportunity on these charts. So you're paying attention. So slightly push more higher. Yeah. So there is a possibility that we may not we're not going to see the price all the way back to that high, and it can start falling. All right, so yeah, you have to pay attention, guys. So price can test the top or can continue to keep falling at any time. All right, it can test these areas and then can fall, or the flag, which is just appearing over there, it can start falling at the current price and can break down, test that low, and can continue to keep falling all the way to the downside. So I need to pull out my pound New Zealand dollar chart on it to understand GBP and Z and D. Okay, there we can see that the pound New Zealand dollar is falling, right? And pound and Kiwi CAD is well ahead of that. So Australian dollar, pound has to, Australian dollar has to gain. All right, okay. So if you understand that, then okay. If you don't understand that, then there is another way to understand. Okay, there we can see that. So Australian dollar still not strong enough, still behind the New Zealand. This is a New Zealand dollar chart. Okay, so if I'm going to pull out another chart on it, Kiwi CAD chart, yeah, we are well ahead. All right, well ahead of, Kiwi CAD is well ahead of these two charts. All right, and if I'm going to pull out another chart on top of that, okay, AUD, CAD, okay, so that is also a buy opportunities. We can see that the CAD is moving very much similar like the Australian dollar, US dollar. Okay, so Australian dollar and CAD is also a buy opportunity. So CAD has to get weaker against the Australian dollar too. All right, so in other words, so Australian dollar has to get stronger simply. Yeah, so then you're gonna see that these moves gonna, market gonna, remove that lag. All right, so we are expecting Australian dollar to gain. All right, so same analysis, so slightly can push up and then drop. So same goes with the Euro Australian dollar. All right, so Euro Australian dollar is also similar. I think. Okay, so I'm gonna pull out that chart. I'm gonna invert that. Okay, so same, or if I'm gonna use another chart on it to, so these currencies, the currencies are correlated to each other. Okay, so Aussie Chief, invert that. So Aussie Chief is also heading down. All right, back to that 28 December lows, highs. Okay, 28 December highs, and broken the first Feb top. So Euro is still going to be at a good spot to watch for it to drop. All right, so strength, we are looking for strength on the euro dollar. All right, so it's basically a move we have to see on the dollar. Okay, so dollar has to move. So when dollar gonna move, you're gonna see these charts gonna make a, remove those legs which are appearing over there simply. All right, so that's why it yields to drop. Okay, so that's where you are paying attention and looking for this to at least test that top, looking for that resistance to hold. Okay, and looking for this move to back to this area or all the way back to that previous low. Okay, so Euro New Zealand dollar also heading back. Yeah, so this is a nice, if you don't see these correlate these gaps which I see, basically a lag, all right, then you need to learn a lot of things. Yeah, so in trading you need to learn a lot of things if you don't see this. Okay, so what has happened over there, actually the New Zealand dollar gone higher simply. Yeah, so there might be a multiple reasons behind that New Zealand dollar strength. All right, we can say that the RBNZ is looking to raise the interest rate or blah blah blah. Yeah, so or whatever. Okay, yeah, but the simple thing is that the dollar has to go down. Okay, dollar has to go down, simple thing, to remove those things. Okay, so there we can see that the euro has fallen against the New Zealand dollar, testing that low again, 28 December lows there. All right, but the Euro Australian dollar is still holding that high. Okay, and you are paying attention at least up to this previous low and this trade. Okay, and best case scenario, euro to fall further all the way back to that low. Okay, so euro, the Uzi chief has tagged that top, this triangle. Okay, so this chart is very much similar like the dollar chief chart. All right, the dollar chief chart. So what we were looking at the dollar chief, we were expecting dollar chief to go down. Okay, and I mean simple strength on the chief. Okay, and we're gonna have that one more leg lower on the chief. Okay, I mean we were having that last week as well, that triangle. All right, and that triangle to play out for another leg lower back to that previous low. Okay, so since last couple of days price is holding that high on that daily time frame. Again, you're paying attention and looking for this to go down. All right, go down all the way back to that low. So yeah, that's what you're looking. So same goes with the Kiwi chief. Okay, so Kiwi chief, we're gonna remove that. In longer term, we're expecting chief to fall, but you know, right now still stay trending. Okay, so still stay trending for downside. One more leg lower. Let's remove that arrow. Okay, so one more leg lower. So chart is showing, so continue to keep falling from that top. Remember, we were expecting, I hope you remember that in the previous weekly market outlook, we were talking about this wedge to break up. Okay, and looking for, you know, these lows to hold, and you know, worst case scenario to hit that low and then reverse. Okay, so this wedge is broken out into the, so basically this wedge is a signal, is a sign, and you know, is telling us that I mean you know, the reversal is ahead. Okay, on so many currencies and assets. Okay, so if I'm gonna let's look at this slide. I mean, first look at this I mean again. Okay, so let me tell you this I mean explain this chart, and you so many other assets going to be easy to understand for you. Okay, so if I'm going to look at the Kiwi CAD, guys, it is not going to happen in a couple of days, the moves. Okay, so it is going to take some time. I mean 1 to 2 months. Price can take a couple of months to one or 2 months to remember, this move basically is driven by higher for longer. Okay, higher for longer scenario, higher for longer rates from the central banks. Okay, and that, I mean the broken out. Okay, this wedge is also broken out over there. We are having that wedge on many charts. All right, so the I have just earlier shown you on the yields. All right, on the US yields, if you remember that. Okay, so the wedge is broken out over there for the downside there. Okay, this wedge, okay, remain at the top and broken out. So I mean, let's just invert that. Okay, so there we can see that the wedge is broken out here at this area and then reversed. And the similar wedges just simply happening over there on the DXY. So on Euro dollar, New Zealand dollar, all those charts. Again, this is also forming the same wedge at that top at this area. All right, that wedge. So Euro dollar, DXY, all these charts are forming the same formation. Yeah, so nothing new. And if I'm gonna look at the dollar yen, okay, so you're gonna see the same wedge. Okay, which has to break into the other side. All right, so this has to break into the other side. Okay, this wedge has to break into that direction. Understand that now? Okay, where is the New Zealand dollar right now against the chief? Okay, at this area. Okay, at that place. Let's 23 December. Okay, 23. So to find out the exact, not 28. All right, so 28 is there. Okay, 28 is there. But 28 here. Okay, let's just take it that the exact. All right, so 26 and 28. 27, 8, yeah, at this area. So there we can see that, and the first FEB is there. The first FEB is already broken out at this area, yeah, and prices just simply went higher. So there you can see that the New Zealand dollar, the dollar yen is still hasn't broken out that wedge. Okay, and someone was asking me about the yen pairs, that what to look for on yen pairs. So this is what we are expecting on the yen pairs. All right, we were expecting that to happen. All right, so for this area from that high, dollar yen to hold that high and then go reverse. Okay, but dollar still went higher against the yen. All right, and you know, still within that wedge. Okay, but the good thing is that we are having that reversal already on Kiwi against the chief, or on many other, or the important thing is that the yields. All right, so the yields are set to fall. Okay, if I'm gonna pull out the yield, UK 2-year yield on that. Okay, and gonna invert that chart. So this is the best signal right now for us. Okay, there we can see that the 2-year yield on UK 2-year bonds, the yields fallen. Okay, bonds being bought. This is simple. This is a simple understanding. All right, so yields dropped, bonds being bought. All right, so bond is a safe haven. Similarly, yen is a safe haven. Yeah, so yen has to go into that direction. And also, you know, Ministry of Finance from Japan, they are, you know, not happy with the $150 yen mark. All right, and anything can happen, guys, which can drive the aggressive move lower. So you're paying attention simply to looking for that move to happen, dollar yen to go down. Okay, so we are having that wedge on many charts. All right, the wedge is telling us that which way we are set to go. Yeah, so dollar yen went back to that top, went back to that 150. All right, but yields never tested that top. All right, so if I'm gonna pull out the US 10-year. All right, so US 10-year never tested that top, this top. All right, and the US 10-year yield, we are expecting US 10-year yield to fall and test that low, 1st February low, 20th December lows. Okay, and dollar yen extended because the weaker yen or Nikkei index was just rising aggressively for upside. Okay, broken the 40 years high, so that's causing the dollar to stay intact for upside. So that's the yen. All right, the dollar yen. Okay, and so that's the wedge, by the way. All right, this wedge which we have seen broken out for upside. All right, so previously we were expecting sell opportunity there on the Kiwi longer term. Yeah, opportunity there, but happened to the downside. Then we were expecting it to reverse from this low to go back up. All right, now we're expecting Kiwi. Yeah, so Kiwi, it is not right to start selling right now. Okay, we need to see strength on the chief, one of the chief pair, one of the chief pair to get stronger. Okay, so the good pair to watch for that is the Euro chief. If Euro chief goes down very aggressively, okay, then you're expecting all these pairs to go down. Aussie chief to go down. I mean Kiwi chief to go down, okay, or pound chief to go down, okay, dollar chief to go down. If one of them, you know, start falling aggressively, then simply you are looking to buy the chief. Okay, then this move. Okay, currently we don't have sign for that move except dollar chief drop. Okay, dollar chief drop, you know, shown by the yields drop. All right, so if that continues to keep falling, obviously you're going to see, you know, the chief strength across the market. Hope that makes sense. Okay, and this is going to be a sell opportunity then, and Aussie chief both going to be a sell opportunity then. Okay, back to the previous low with the daily trend. Okay, so Kiwi CAD to test that top. Okay, not expecting at the moment to break that top. Okay, but obviously if yields goes down, we may see another breakout of that top, and price can go through that top much higher, targets can appear over there on the Kiwi CAD. But we don't have a perfect trade on this at the moment. Okay, but again, you are looking price to hold that 28 December highs and resistance to hold. Okay, and price to start falling from that high. Okay, short-term buy opportunity can appear over there, guys, like that. Okay, this is not a best opportunity. I have a better opportunity than that. Okay, so you should pay attention over there rather than looking for this trade. Okay, the next chart gonna be a better opportunity for this. But if you are trading, all right, this is what you're looking. Yeah, not a best trade. Okay, but the best trade, good trade gonna be the next chart. All right, this is where you're paying attention. Okay, so we have to go much higher on this chart. All right, so Kiwi CAD to hit the top, hit the 28, and if price starts struggling to break through that, start selling the resistance, Kiwi CAD. All right, so I need to pull out the Kiwi CAD chart on it. Okay, so we are testing that top on the Kiwi CAD. So whenever this lag appears, it's a good to pay attention for that buy opportunity. Okay, so where is the first Feb? This is the first Feb, all right? So 2nd February, okay, top has already broken out. The price has to rise all the way back to that high. So there you are paying attention these areas. Okay, so price to hold that and 4-hour time frame opportunity. All right, this is where you are paying attention. Support to hold. All right, and price to rise all the way back to that high. So this is the trade, better trade than the Kiwi CAD at the current price. Okay, and if I'm gonna go to the lower time frame, we'll look at the trend. All right, so the trend is appearing over there, and you're paying attention at that support area. Okay, so you're paying attention at that support area to hold. Or 4-hour time frame correction is still underway. Okay, but that's where you're paying attention. These gonna be the ranges for you to trade. So in case if we don't see that continuation for upside, again, price is testing the low, still gonna be a buy opportunity, guys. Okay, remember in the previous weekly market outlook, we were anticipating this to break out or one more leg lower. So we got a breakout of that trend and heading higher. Okay, so the chart is very much similar like the Uzi Chief. Yeah, so Uzi Chief is weaker, we can say that. Okay, and Uzi Chief is well ahead. So the Uzi CAD has to, Australian dollar has to get stronger. So continuation trade, you are watching it on the Uzi CAD. Euro Pound, hold the floor, go back up. All right, so again, same like previous, we haven't seen much moves on it. Okay, but this is what we are anticipating. Hold these support areas. Okay, hold these support areas or this previous low and go back up. Simple. And keep Pound Chief invert. All right, so what we are anticipating here is just simply need to invert that chart. Not invert, just simply yield. All right, so yield is telling us that the pound has to drop against the chief. Okay, so move is clearly being shown again. 1st Feb and 28th December lows target. Okay, which comes there 1st February or 28th December. All right, and yield has dropped already over there. So if I'm going to pull out the dollar chief chart, okay, so dollar chief chart is also doing similar. So you are watching, paying attention on this breakout. Okay, this flag breakout, aggressive breakout, and this to go down all the way back to that low, or in best case scenario, these gonna be the targets. Yeah, and these are gonna be the targets. So that's what you're looking. All right, so that's your pound chief. As Australian dollar, New Zealand dollar, okay, is also a good buy opportunity. All right, coming back to these lows. In the previous week we were expecting it to go further lower. We got some bounce off on it. All right, so you're simply paying attention this previous low, these lows. Okay, so these lows going to be a longer term buy opportunity. So as I said that, we need to see strength on the Australian dollar. Okay, New Zealand dollar is strong after the rate the CN on New Zealand dollar. We may see strength on Australian dollar, or Kiwi can get weaker simply. Okay, because Kiwi has already got its move. So the Australian dollar. So you're paying attention at that previous low, watching price action, looking for that arrow to happen. Australian dollar to go higher. Okay, so it's a buy opportunity. So chief yen, it can break through the previous top and we may see a new high over there. Okay, and this wedge to fall. I mean, resistance is holding right now on the chief. Okay, so you're paying attention on that resistance. Okay, it took a lot of time to, we have seen moves on other chief pairs. Okay, but chief dropped, but chief hasn't dropped against the yen. Okay, but it is set to drop. Okay, it is set to drop. You're paying attention at that resistance area, this area. As said, the dollar yen has to go down. If we gotta move on the dollar yen. Okay, then you are looking for very much similar like that. All right, so again, yeah, same chart. Yeah, this December lows at 62, first Feb at 65. So top to hold the Kiwi chief and go down. Okay, so euro yen is also same. Euro yen to tag the top or slightly can break through that top and fall aggressively from that top. All right, so again, yield is telling us that what we may see. Okay, so top to hold and aggressively drop from that top. All right, and 28 December lows. All right, 28 December lows there, this area, and first Feb there. All right, so that's what you're looking. They are back at the top and looking for a sharp aggressive breakdown, and once that comes, you're looking it to sell. All right, slightly can break through the previous top, so don't get too early. Watch for a sharp breakdown. Okay, similar like the previous one, strong sell off like this, and then you are in. Same on the dollar, on the pound yen, back at the top again. All right, so break through the top, and again same stuff. Okay, so bonds to get stronger, yields to go lower. Okay, and the yen to get stronger too. So same again. All right, that's the 2-year yields. Okay, December lows here, first Feb here. Okay, it is at the top. You are simply expecting a sharp breakdown over there. All right, so if I'm going to pull out some all right, this is what you are watching over there, a sharp sell-off, and once that appears, just jump in. Okay, and looking for that to head towards those dates. Okay, first Feb, 28 December lows. All right, so FEB lines there. Okay, and now it's telling us that up to which level we can expect our targets. All right, so 27, a 70% retracement or 618 is there. All right, and these going to be the targets. Okay, so that's what you are looking on these. They are pushing higher, let them push, and once they start falling like the 2-year yield has done, okay, and once sharp sell-off is just appearing over there, bang, you are looking, they are at the top. Okay, same goes with the dollar yen. So keep eyes on the Ministry of Finance from Japan. Okay, they last week I have shown in last week as well that they are not happy with the higher dollar yen, so the weaker yen. Okay, and they are constantly saying that they are watching these areas, all right, $150, and if they will let that to break through the top, then no one can stop, all right. And break through the top is also possible, as we can see that the Nikkei index has gone higher so aggressively. So the only thing which can drop the dollar against the yen from the current price, either the intervention from the Ministry of Finance or the policy change from the Bank of Japan, all right. So if they leave the negative interest rate policy in March, I guess we are having meeting in the March. Let's see what date the meeting is. Okay, there as I said that the window is closing for the Bank of Japan, all right. The window is closing for them, so they have to make a decision either to get out from the negative interest rate policy or not, all right. They are already technically fallen into recession. Japan is already fallen into recession, and even after having such a weaker policy, all right. So March 19, all right, March 19. So the pressure is building for them to either abandon. Yes, they may abandon the yield curve control on this, at least. Okay, they can abandon that the yield curve control on this meeting if they are not going to come out from the negative interest rate policy, but at least they can abandon that. And Ueda, has given us a clue in the previous, press conference that they may end the yield curve, all right, yield curve control completely. So if they are going to do that, okay, still going to be a bullish sign for the yen. So going to be important meeting, but they are extremely dovish, even after the Japan has fallen into recession. How many countries have fallen into recession? So the first is the China. Okay, China is really struggling. China. Okay, so China, Japan, all right, and UK, all right. So Germany is also fallen into recession, all right. And yeah, so this list gonna grow in coming days, 2 weeks. This list is going to grow. This is not going to get smaller, all right. So more countries gonna start falling into recession, guys. Okay, list is first, as you know that when we were talking about this, the recession, only country was the China, which were struggling with the disinflation, all right. The other countries are also falling with the higher, no growth, no GDP, but having higher inflation. Yeah, so stagnation is there. So this thing gonna get worse. This is not going to improve because rates are in extremely tight territory. So this list is going to grow, all right. So window is closing for them, and you are paying attention closely on the dollar yen, all right, and 150 areas. You are simply looking for a sharp sell-off to come out, and you are simply looking to join that, all right. Okay, as I said that 19 March gonna be important meeting for the yen, all right. So they have to make a decision either to change policy or not. At least, I guess they're gonna change the yield curve control on this meeting. Yeah, if they are not going to do anything, at least they're going to change that. So but this is what you are looking. Okay, so sharp sell-off comes, get in, look for it to hit the 20th December lows. Okay, where is the 20th December lows? Here is the 20th December lows. Where is the 1st February lows? Okay, there is the 1st February lows. If I'm going to pull out my Kiwi CAD chart on it, okay, and going to invert that, all right, Kiwi CAD is also already hitting that 20th December lows, heading towards that. Okay, so dollar yen is still high. This is basically a setup, all right, where we were trying previously. We were trying here to get into that trade, all right, where we didn't get that trade. We were trying here. We got that couple of short opportunities over there from that top on lower time frame, but the move on the bigger time frame move, okay, the 4-hour time frame move is not appeared yet, all right. 1-to-1 risk reward ratio already appeared over there at least a couple of times, all right. This is what we were anticipating previously. So All right, so short-term moves appeared over the 1-to-1 risk-reward ratio. These moves from the top appeared over there. Okay, these, but the move 4-hour time frame move, like the move which we are already having on the Kiwi CAD, still yet to appear over there. Okay, so that's what you are watching, guys. So the move is this. Okay, this is the trade you are watching. All right, so already being shown by the Kiwi CAD, or if not the Kiwi CAD, then the 2-year yield is a good sign. 2-year yield, US 2-year yield is a good sign. Make sense? Yeah. This is a very nice indication we are having this week. The US 2-year, the UK 2-year yield, which has fallen over there on Friday. Okay, so same goes with the other pairs. December lows. Okay. In CAD yen is at the top. You are simply looking for a same analysis like the dollar yen. All right, so December lows comes. All right, so 6th December, 28th December. Okay, so there is the 28th. So generally this low, right? So you are paying attention that low, and first Feb low is here. Right, this is the first Feb low, and 28 December low comes here. Okay, but once we're gonna see that the drop, I see that the CAD yen can break through that low. Okay, so we may see a very sharp move. We may see a sharp move can happen over there, being shown by the yields. All right, so if I'm gonna pull out the, all right, so this is what you are looking for: sharp drop and continue to keep falling all the way back to that previous low. Okay, that target and that target. Once price start falling aggressively, have multiple shorts over there. All right, and let the price falling all the way back to that low. Okay, so that's my CAD yen chart, and if I'm gonna look at the Uzi yen, same. I don't think I need to talk about that a lot. All right, so same analysis is back at the top. All right, so need to pull out my 2-year yield chart. All right, so December lows, these areas, December lows here, comes here at this area. Let's remove that, and there December. Okay, the first Feb low is here. So this chart moves slow. All right, moves slowly again. I mean, moves slowly. All right, but we are having clearly a sign over there for these pairs to go down. Okay, so you're watching it, and the move is clearly, a wave is clearly being shown that what way we can go. Okay, this is what you are looking. Simple. Resistance. You are just simply watching the resistance, sell off, and bang in. Okay, this chart too, specifically during the rate decision. Okay, the rate decision in the, this chart may fall at the last. Okay, may not fall at the start. Others can fall first. Then you can have that chart to go down. Okay, so yeah, so you are watching it to go down again. December dates, some comes 20 December, come there, and first Feb there, and same analysis. All right, this move. Okay, so target gonna be, your target gonna be this and these lows. Okay, and sell off comes, then you are in. So we can see that the Euro CAD can go back up all the way back to that high. All right, so, and worse simply. All right, so it can continue. We may not see one more leg low. Let's just simply change that in a different way. Okay, so same like Kiwi CAD chart. Yeah, you see that Kiwi CAD is also testing that high. Okay, Kiwi CAD is testing that high. We can see that the Euro CAD can go also back to that high too. or very much similar like the Uzi CAD. Okay, so Uzi CAD is doing, Uzi CAD, all right, continue to keep rising, breakthrough. Already broken. It has already broken the 4-hour time frame correction, which I have shown you on the Uzi CAD chart. Okay, so Uzi CAD 4-hour time frame. All right, so Kiwi Euro CAD 4-hour time frame correction already broken through. And there we can see that the correction already broken through, but it hasn't broken up yet here on this area. So that's what you are looking on the Uzi CAD. Okay, Uzi CAD, Euro CAD also gone higher. Uzi CAD is pushing higher, and it's moving already. All right, so it's moving already. You have to wait on a lower time frame correction to get in. And again, see that wedge. All right, last week I was a bit cautious on it. Yeah, there was a possibility for another leg lower, but that wedge broke out. Okay, wedge broke out. Wedge, the wedge, which wedge? Kiwi Chief wedge. Okay, so that wedge, as I said, that we're gonna see that wedge or channel on many pairs, many assets. See that it's broken out for upside right there and broken out. So Kiwi Chief gone higher, so we may see more upside on the Euro CAD. Euro CAD can also drive for more upside, guys. Okay, so not at a best spot where we can see continuation. Continuation has already broken out. The 4-hour time frame already broken out. Okay, where was the buy opportunity has happened already, so you can't do anything on it. Okay, this support area was a buy opportunity. Moving averages were holding that support area, and prices just simply heading higher. So yeah, you can't do anything right now. It's just moving. In case if another correction happens, okay, then you can show your interest for another buy like that. Okay, pullback happens, moving average comes, support area, and then again. Okay, so euro to continue, keep pushing more higher all the way back to that daily top. Okay, first February, yeah, first February low was there, top was there. Okay, so it has already broken out, so gone higher. So CAD Chief to go to the opposite side, one more leg lower. Okay, not a best chart, I'm going to ignore it. And Chinese yuan, okay, so 710. All right, 710. Again, I need to pull out the 28 December lows there. First February low was there at this area. Price has already tested that. Okay, so first February low. So if I'm going to pull out the 2-year on it, all right, UK 2-year is also dragging lower. So simple chart is showing clearly that what we are anticipating. Okay, last week we were having that formation. Okay, so this week there is a correction. Okay, this correction to break down and continue to keep falling. If it doesn't break out, then go all the way back to that high and then drop from that high. Okay, this high. Okay, right now we are anticipating this flag to break out, this test that low, or best case scenario continue towards 28 December lows. Okay, so dollar-CAD has already went higher, so we don't have much on that chart. All right, dollar peso, you're paying attention on dollar peso, as I said that in the previously. Okay, it's struggling, it's done, very much done, it's bearish wave. Okay, and this flag to break out, this daily flag is just simply happening over there, this daily flag. All right, so this daily flag to sharply break up and go higher, and there you're paying attention at these lows. Okay, and short-term trade gonna be for upside at these areas. Okay, so short-term trade back to that high within that wedge and up to that high. And okay, so there where I'm gonna draw horizontal raise support areas, resistance target. In longer term, you are expecting it to go much higher. Okay, this top, all right, and longer term much higher. Okay, take out that high, longer term, this high, as we know that the dollar rand has already claimed that high, and this chart hasn't claimed that high yet. USD ZAR. Okay, there we can see that the dollar has claimed that high against the rand, but dollar hasn't claimed that high against the peso. The only reason is that the rate is extremely high in the Mexico, causing that trend to stay intact for the downside. But yes, as we know that countries are falling into recession, list is growing. All right, so they're going to cut the rate. Once they're going to cut the rates, we're going to see aggressive sharp breakout on this chart for upside. So it's a longer term chart. All right, may not rise so I mean tomorrow or day after tomorrow, yeah, but yes, that's the trend. Okay, using the fundamentals, which way price gonna go. So Euro Chiefs, pushing higher. I wanted this chart to continue to keep pushing higher, okay, and go higher back to that high. This is where I wanted this chart to go. All right, so, and yields to go. So if I'm gonna pull out the yield again, all right, so that's what I have shown on the yield. All right, so yields to this is UK yield. All right, so I'm using UK yields. So if I'm gonna invert that, and this is where I want UK 2-year yields to go. All right, so if yields goes to that way, then we're gonna see that all right, there. So maybe you're not gonna understand that way. So this is the weekly top. All right, weekly top. So Euro Chief slightly moves faster than the others. All right, and hence lead us that where the rest of the market moves. Okay, that's why we still may see another leg lower on this chart, guys, the Euro Chief. Okay, still, if Euro Chief drops for another leg lower, we already gonna knew that what's the move gonna be on the 4-hour time frame once we're gonna have drop on the yields. All right, so let's look at the US yields. Okay, I love to compare the US yields. All right, so what I have shown, that's all right, so what I have shown on the all right, so on weekly chart, so this is where I want to see the all right, so there. Okay, there at that place. So what I have shown on the 2-year and 10-year yield, another leg lower there. Okay, another leg lower there, back to this previous 20th December lows. Okay, or all the way back to this previous low. So I want to see Kiwi Chief to go into this area, this direction too. Okay, but we still can see another leg lower. So if we see another leg lower on the Chief, okay, that means yields may reverse from these lows, 20th December lows, for another leg higher. Okay, this flat formation possibility can exist over there. All right, like that ABC move can appear over there. So as I said, that the Euro Chief tend to move ahead, move faster than the others. Okay, and hence lead that where the market is going. Okay, so that's the reason I have shown you the buy opportunity, the sell opportunities on the yen pairs. Okay, in other words, we can see that the Chief has dropped from that rose above that previous low after breaking that previous Yeah, after breaking that previous low, it is rising, moving into that direction. Okay, so we have seen that high we have seen that low on Euro Chief way before than the highs we are having on the yen pair simply now. All right, so I mean the Euro Chief was telling us that the new high was possible on the yen pairs. All right, so which pair I should use to let you know that? So let's just use that. All right, so there we can see that the weekly top was set to break. Okay, so it's basically the yields which are moving the market, the higher rates which are moving the market, moving these currencies, and inflation. Okay, so there we can see that it broken out that top. Now it's reversing, right? And I'm anticipating it to continue, Euro Chief to continue, keep heading towards one. All right, Euro Chief keep heading towards one, and US yields to also keep heading towards US 10-year yields, or all yields to keep heading towards the weekly lows. All right. Okay, why we are expecting yields to go to that weekly lows? Simple, inflation is falling. Okay, inflation is heading towards that weekly low, all right, and yields have to head towards that weekly lows. All right, what's holding the yields higher is simply central banks are not ready to cut the interest rate. All right, and saying that they're going to hold the interest rate higher for longer. All right, so till they are saying that they're gonna hold the rates higher for longer, price is gonna keep breaking those highs, all right, or those lows everywhere, these weekly lows. All right, once they will start cutting the rates, we're gonna see aggressive reversals, drop on yields, bonds gonna go higher. All right, and these weekly lows gonna be in place for longer term. When I say longer term, means for years. Okay, for years, for 2-3 years, we're not gonna see these lows again for years, or maybe for next 5 years when you're going to see these lows. All right, because it's the rates. All right, higher rates are holding these lows. I mean, Euro Chief is holding that lows because of the higher rates. All right, so the Euro Chief is reversing from the lows, means we are also anticipating the yen pairs to start gaining. All right, and go towards that weekly low on the dollar yen. Okay, so you're gonna see that formation across the market. All right, this bigger weekly formation across the market. It's the same formation you're gonna see on the yields, as I said that. All right, so the yield chart, if I'm gonna bring back that 10-year yield. Okay, so this is where we are anticipating this weekly. So okay, let me pull out the inflation chart on it. Okay, the inflation chart is telling us US IRYY. That's the inflation rate. Okay, and this is telling us that where we are heading for the longer term. You see that? Now this chart is clearly telling us that where is the longer term direction of the yields. Okay, this let's pull out in a clear manner. Okay, so let's take out our cross line. This is the weekly. Let me remove that arrow. Let's remove that arrow. Okay, let's pull out there and there. So the 16 January or 9th of January 23rd. All right, so 23rd low. So this is where we want it to go, right? And this is where we want it to go in longer term. All right, and this is led us. I mean, the inflation is leading us. Okay, the inflation chart is clearly telling us that where we found top on inflation at this area, at the high. Okay, at 9% or 10%, whatever. Okay, since then inflation is falling, stuck at 3.2. All right, stuck at 3.3%. Okay, and what is the target? 2%. All right, and 2%. So inflation has to go to 2%. All right, and in longer term, yields also has to go to 2%. All right, so what is, I have explained that in the previous weekly market outlook as well, guys. Okay, so inflation stuck at within that box. All right, so sticky inflation. Okay, after having that sticky inflation, Fed was constantly saying that they're gonna hold rates higher. They're not gonna cut the rate in March. Remember, market was pricing in for first rate cut in March, but suddenly everything has just changed. All right, the market is pricing in first rate cut after July, maybe August. All right, so that can change aggressively. That can change at any time once data start pointing out for quicker rate cuts. All right, so if inflation falls below 2% aggressively, yeah, then obviously things gonna start getting changed. Okay, now what is telling us that the US is also going to face disinflation? Okay, so if we're gonna pull out the Chinese inflation on that, CHIRYY, CN, not H. H is the Swiss, so CNIRYY. Okay, look at that. Now this is more clear lead for us that what is going to happen with the rest of the world as well. So list will grow. So countries will more countries will be added into recession list. All right. So the China is struggling very, very bad. So it's negative 0.8. All right, negative 0.8. All right, so strong disinflationary trend. China is struggling badly. All right, and what is happening in the US? Sticky inflation. Okay, so what's going to be the trend in the US in the inflation trend? Okay, we're not going to have that trend. All right, inflation is not going into that way. Inflation is going into that way. All right, so US is also going to face. So they are facing the sticky inflation. Okay, so mostly the sticky part is in the a shelter section. All right, so because that's delayed, that's taking time to get out from this system and holding the inflation at current area at 3%. So that's causing the inflation to stay sticky. Once sheltered inflation is lagging, once that inflation gonna start falling, okay, so we're gonna see that the trend gonna be to the downside. Now you understand that. We're gonna if we're gonna go back to the yields. Okay, so where we are on the yields, okay, at that high, that trend has to emerge over there for the downside. Okay, and where is the chief yen? So chief yen has also go to the downside. So we're gonna see a bigger reversal on the euro chief as well. Okay, but yeah, this is a bigger picture. It's not going to change anytime soon. This is going to stay there for a couple of years. Okay, and that's the trend. That is the trend. All right, so that's why we are having highs and prices just keep pushing up to the downside on euro chief. Okay, so another leg is still possible. So still trending move can appear over there for one more leg lower on the euro chief. All right, so euro chief still can drag for him, but what is the bigger move? Okay, for upside. All right, so the chart is very much same like the dollar chief. Okay, if you see that, as I said, that if any chief pair moves aggressively to the downside, simply you are looking for another leg lower. Okay, and we're gonna have a sideways market on the yields. Okay, like that. But from lows, looking for buys for longer term. Yeah, makes sense. Okay, so we are having US equities, guys, so strong trending for upside. Last week we were talking about buy the dip opportunity on lower time frame. All right, so still trending for upside. Yeah, so same again, we had that update might be over there. So last week what we were talking about, a buy opportunity for short term. Okay, we held the moving averages. We did not exactly test the previous support area. Okay, we tested that low and bounced off. All right, we were talking about price to visit that previous low. So next leg appeared over there after that next leg appeared over there. So we don't have opportunity right now, okay? But if the way arrows are showing, if we get a pullback, price fall back again within the moving averages, still stay trending. All right, still stay trending. And yeah, so what has caused that move? Simply the Nvidia earnings has caused that move. Okay, Nvidia earnings has caused that move to happen. All right, so let's look at the Nvidia first and then look at the indices. Okay, what happened over there? Okay, again guys, for longer term perspective, I don't see that the Nvidia is going to sustain that trend. Okay, we see that bubble every time. Okay, this is not the first time that the bubble is appearing over there. There are so many examples. We have seen that those kind of bubbles in the last couple of years. All right, Bitcoin formed that bubble, all right, and then popped up, all right, from 60 popped up, all right, and palladium, if you remember that, went above 3,000, all right, started the move from 1,200, went up to 3,000 and then popped up, right? So there are many other Ethereum, many other charts, all right, they have done that, and they popped up. Okay, so I don't see reason for this to sustain that trend. Okay, big names are struggling to sustain that trend. So if you are buying Nvidia at the current price, all right, then market capitalization, so market value. Okay, so there we can see that the Nvidia market cap is kind of above 2.3, if I'm not wrong. Yeah, so it was 1.75 just a couple of days ago, before earnings. Okay, so the point here is that this is not going to sustain. We have seen those bubbles many times. Okay, so let me pull out. So Apple, so big names, some big companies are having more than $2 trillion market cap, and Nvidia, yes, so a couple of days ago it was having, so so 1.9 trillion market cap. Okay, but after earnings we have seen the market cap above 2 trillion. All right, so Apple is having market cap 2.8, all right, above 2.8 trillion, all right, 2.9 trillion, close to 3 trillion, we can say that on Apple. Okay, so Apple having $3 trillion market cap makes sense. Okay, so Aramco is having $3 trillion market cap makes sense, all right, but the Nvidia having market cap above $2 trillion is not making sense simply, all right? So it's simply a bubble, all right? So why it's a bubble? Because there is no competitor in the market, all right? There is no competitor in the market. Nvidia is not having any competitor, for AI chips. So that's causing people to just blindly keep buying. If we are going to see a competitor into the market, all right, then we're going to see a significant drop on it. Okay, and it may not sustain that trend and can fall very aggressively to the downside. Okay, so if you're buying at the current price, make sure you understand that it can continue to keep pushing higher. All right, so you never know where is the top when such kind of the bubbles are forming. All right, so palladium, let me check the palladium chart. Okay, so this is the palladium. Okay, so this is the palladium. One second, guys. Okay, so this is palladium. All right, so what was happening over there when bubble was creating over there? It was just, we were having just one way direction. All right, so it started to rise from 400, all right, and went up to, look at that, up to 3000. Yes, it was expensive than the gold. You see that? If I'm gonna pull out XAUUSD, all right, look at that. So it became expensive than the gold, went up to 3000. Look at that. All right, so expensive than the gold. Gold is 2000 and it went up to 3000. All right, so this bubble caused by the catalytic converter. All right, so because palladium was being used into that, and everyone was just buying blindly, and then what happened? Bang. Okay, so similarly, okay, Nvidia is pushing higher, and yeah, still can continue to keep pushing higher, but clearly Nvidia is in a bubble territory. All right, it can go up to 1000, can go up to 1500, but you just need to, if you are doubling the price, you just need to double the market cap. All right, then you can expect the Nvidia to rise. Okay, all right, so if you're expecting it to rise up to let me bring the market cap. All right, so if you are expecting Nvidia to where is the indicator? Market capitalization. So there we are having. Okay, so if you want the Nvidia to, I mean, if you are targeting the Nvidia to hit the 1600, all right, 1600. I mean, if price, some people are expecting that the 1600 is in sight. All right, so 1600 in sight. So you need to see another $2 trillion market capitalization in it. All right, another $2 trillion should be added over there before, you know, we see another 100% rise on the Nvidia. So it's clearly in a bubble territory, can continue to keep pushing more higher, you never know. But yes, what you know is that the trend is not going to sustain. Numbers are not making any sense at the moment. All right, and that has caused the one more leg up higher in the US indices last week. Okay, that was my point. All right, that has caused the US indices to push for another leg higher, and there was a short-term buy opportunity appeared over there, which I was talking about in the previous weekly market outlook, that look for buy on the 4-hour moving averages on these charts. Okay, so similarly, again, if they pull back, as long as the trend is intact, you are looking for a buy opportunity. Nasdaq index was much better. All right, it tested that previous low and then bounced off. Again, Nas, bounced off, and we have seen a very nice aggressive leg higher. Okay, so similarly, if we see another pushback and prices testing these lows, they're going to be a short-term one more up leg buy opportunity. So trending move. You're going to see similar picture on all my indices chart. Okay, so Nvidia has caused that move to happen. That was the last week structure. All right, so flat formation, price tested that previous low and simply bounced off for another leg higher. That's what we were talking about in the previous weekly market outlook last week. All right, now we are at the top. We need another pullback. Okay, and once that pullback happens, and stay trending, and make sure you understand that you are buying at the top, buying at the trend, and buying for short term, not buying for longer term. Bigger weekly drop can happen at any time, all right, or daily drop can happen at any time, so understand that. All right, so US 2-year yield, US 2000 is also similar. Okay, so yeah, so test, I mean, we can still see another leg lower, not at a best spot where you can start jumping into the market. Okay, we still can see another leg lower all the way back to that previous low. Okay, so US and German 30 is also similar. We are strongly trending for upside. Bigger drop is still possible within that triangle, but on lower time frame, Again, same thing happened. Okay, so flat formation appeared over there, this area, 4-hour time frame. All right, and 4-hour moving averages held, and next leg appeared over there. So this move simply, as I said, that caused by the Nvidia. All right, so 1.89 billions to 1.89 trillion to 2 something. All right, so more than, we can say that around 500 billion maybe, or maybe more than 500 billion dollar market cap added into the Nvidia last week after the earnings. All right, Nvidia beat the earnings target. All right, caused that move to happen. So that move to happen. All right, this move to happen. So currently still trending. Okay, it can continue to keep pushing more higher, right? And there is still possibility for a drop to the downside. So if you're buying at the current price, understand that you are buying at the highs, where we can see, we can see bigger correction. Okay, so short-term buy opportunities. All right, and these one more, I mean short-term trade. Okay, one more up higher. Thank you, MK. Okay, so same on these indices. Okay, last week we were talking about correction or continuation. Structure is, arrows are still there. I haven't updated that. Okay, so we are still trending for upside. Yeah, it can continue, but yes. Okay, what I need to do, yeah, I just need to put it there. Okay, and there, and you never know, it still can continue. All right, still can continue. So that's what we are having. So still trending. So short on lower time frame, you still can buy for short as shown. All right, but very short term, guys, very short term, very small time, I mean very small move. All right, like this previous low to hold, and then one more leg higher. Same goes with the other, these indices, CAC 40. Yeah, that's what we were talking about last week. Breakthrough and continue. Price broken through. Yeah, Nvidia broke the top, and they broken too. Okay, now same again. Continue to keep pushing more higher, or give us a deeper pullback. All right, so not much on the indices. They already made their move as shown in the last weekly market outlook. Okay, so this is the interesting. Okay, interesting. UK 100 index is still lagging than many others. Remember the previously when we were expecting it to rise from these lows, all right, and it went higher from these lows, right? It is still trending since then. Okay, now the point here is that this index is still undervalued. Okay, UK 100 index is still undervalued, and we may see a big breakout over there at some point. So what actually you are doing, you are actually looking for a daily breakout within that triangle, shown that last week as well, right? But right now you don't have a perfect opportunity. Okay, but every time when you see that the daily move happening over there back to this previous low is actually a longer term buy opportunity. All right, in these areas, prices testing support areas. Okay, then you're looking at complete leg over there. All right, so leg, like, I mean, UK is not doing well. Okay, so simply UK is not doing well since we are having Brexit, and the rest of the EU. All right, so the rest of the EU indices are doing extremely well. So let's just pull out CAC 40 on it, or CAC 40. All right, so CAC 40, and check how much lag we are having over there. All right, so CAC 40 is just simply gone above that previous high, broken above that high. Okay, a nice leg up is appearing over there on this weekly chart, but the UK 100 index is still stuck within that wedge. All right, so wedge is very much similar like others. We had that wedge on other indices as well. Come on. Okay, so it's a longer term, you know, buy the support areas on this chart. Okay, buy every time when you see that it's coming back to these areas. So UK 100 index gonna give you a better opportunities as with compared to the others. All right, so at least if we're not gonna get a whole leg, which I see is coming at some point, even UK is in recession, okay, because rates gonna come down and that can drive it to go higher, that one more up leg. If we're not gonna get that, then at least you're gonna get that leg from the support areas, right? This one more leg like that. So it's gonna be a buy opportunity, that triangle to break up for the next leg higher. Okay, so Nikkei index has broken the record, broken a historical record, 40 years record. All right, so this is not a full chart, all right, but we have broken the 1987 or something like that top. All right, so yeah, so I'm expecting a deeper pullback at some point. All right, so let me pull out the NI. Let's see if we had a complete chart on that. No data behind that. All right, so yeah, we have gone above and trend is still strong. Okay, and at some point we're gonna have a deeper drop on it. Nikkei gonna fall very aggressively at some point. Okay, so yeah, still short-term trending, but yes, I'm set to see a bigger weekly, you know, pullback over there. Okay, I'm expecting it a bigger weekly pullback to happen. They have extended a lot simply. All right, so short-term bullish. All right, yeah, so if it has that low, simply same like last week. So where I see potential, by the way, in the Chinese indices. Okay, I see potential over there in the Chinese indices. All right, so China is struggling, but it can take some time. But what I see is that there are going to be the potential in China on Chinese indices. Okay, they're going to rise for a big run. May take some time, guys, but potential is there. They are cheap. So Chinese government is also trying whatever they can to give a pump to the indices. Okay, but every time when they are doing something, you know, not, you know, helping them, and the reason is very much simple, that the rates are extremely high in the West. Okay, and demand is not there from the West for the Chinese, causing the indices to stay under pressure. Okay, so there we're gonna have a big run at some point. Okay, they're gonna be a big run. Okay, big run and all-time high at some point, like we are having all-time high in you know, in Japanese equities after I guess after 40 years. All right, so new high after 40 years. So this is Hang Seng. Okay, so when it comes to the bottom, you are looking for buy. Hang Seng buy is a buy. All right, and Hang Seng Tech Index is also going to be a buy from these lows. Okay, for longer term, and 12,000 is a far away target, far away way high. Okay, so there we are having potential. Okay, this is the structure, and Golden Dragon Index is also very much same structure. Okay, same flag, daily flag, that daily flag. All right, that daily flag to break through into that direction for longer term. Okay, so go to that high. All right, so there is the potential. So this inflation has caused these indices to stay close to the floor. Okay, but China cannot stay into this inflation. All right, they will come out, and will come out strongly. Okay, that will drive those indices for upside. So Gold, all right? So gold, we were talking about gold to take out that top last week. Okay, we were here at that 15-minute correction which was happening over there, and we were expecting gold to take out that high. Okay, gold has taken out that high and gone beyond that. Okay, so we had that chart. This is what we're talking about, gold. All right, so using silver chart was leading us that the breakout is set to come on the gold, and we got that breakout on 15-minute time frame. Nice move happened over there. So yeah, so even it is still staying bullish, you know, after, I mean, still bullish after hitting that. So analysis is very much simple. Like I said last week, okay, that we still can go to hit that high. All right. Okay, so nothing, guys, nothing different on the gold chart. It is same. Let's invert that, okay, and pull out our yields on top of that. Okay, I'm gonna use the UK yields again. All right, so where is the 28 December lows? So what we have spoken about on other charts, 28 December lows, 1st Feb lows, all right, yield is heading towards that, and gold is also heading towards that. Okay, 28 December highs, all right, and the first are going to be this previous first Feb top, and in best case scenario 28 December lows. Okay, yeah, nothing new on this chart. So as that's why I said at the start of the weekly market outlook, you're going to see most of my charts going to point into the same direction. All right, again, if we are wrong, okay, then another leg lower will be tradable. Okay, we need a lead for that. We don't have lead for this move yet. All right, so I was, you know, showing a buy opportunity, as I said that previously in the previous weekly market outlook. I have shown, you know, a buy opportunity over there. All right, at this area on 15-minute time frame, buy opportunity. And previously the chart we have posted over there was looking for a buy there. Okay, that did not work. Simply we have seen a crash over there because of the inflation data, and then the next buy came over there at this area. Okay, and that, if you're holding that trade, all right, so the target, 1st Feb target, all right, and 28 December target is still intact as shown in the previous weekly market outlook. All right, and I guess I do have that 15-minute chart here on gold. All right, this, yeah, there, this is the chart. All right, that this is the 15-minute chart last week. So the trade was here. Okay, that was the 15-minute chart. Okay, so look at that, how interesting this stuff is. So you just need to understand that. We just need to master that. Okay, you don't need to use indicators for that. Okay, market, you're gonna get your setups from the market with high probabilities. Okay, with extremely, you know, high probabilities. Now, I mean, and that probability is gonna be far more better than using any other indicators. Okay, so clearly we can see there on these two charts that the silver was gaining, silver was getting strong. All right, while the gold wasn't getting strong. Okay, so silver was getting strong was an indication that the dollar is set to fall. Okay, but that wasn't happening over there here on gold. Okay, this was a clear indication that this is a buy opportunity. Gold was a buy opportunity, and we're still heading into that direction. Okay, so you don't need to put any indicator on this chart. We only, I mean, we got that setup from the market. We got that setup from looking at the other assets, how the other assets were doing. All right, and they were telling us that what is going to happen. So setup was there. Okay, and look at that, and we are still heading into this wave on a bigger time frame. Okay, and as I said, that can continue to keep rising up to 1st Feb. Yeah, so we have seen a couple of charts already that has taken out the 1st February high. All right, and can continue to keep rising all the way up to 28 December. Okay, so keeping that thing in mind, So what opportunities we need to look at the gold is just simply a continuation trade, okay, for more upside. That's it, for short-term continuation trade. All right, so if I'm gonna pull out this area, okay, so by doing so the way I have analyzed these charts, so what you get more confidence, okay, to manipulate with your risk. Okay, it gives you more confidence to play out with your risk. All right, you can increase and decrease your risk. Yeah, if setup is very much clear, you can see that yes, it's moving. All right, it's moving very aggressively, but once one asset is moving very aggressively, all right, and the other asset is not moving very aggressively. Okay, you can increase your risk on that setup. That single trade can give you more return, more reward. Once you are fully confident, yes, it is going to play out the way other asset has already played out. So you get more confidence by doing and by analyzing the market that way. Okay, otherwise if you're gonna look at the indicator, you're gonna look at the blah blah blah, okay, that's not going to give you confidence to trade. All right, you're only going to rely on the indicators, and you cannot maximize the potential from the opportunity you see in the market. All right, so by getting the confidence and analyzing the chart, you can maximize the potential by increasing and decreasing the risk. All right, yeah, so that's the point. So what you are simply looking, so again, as I said, that continuation, let's pull out the moving averages. All right, so watch price action at this area, and you're looking at the target and these areas. Okay, goal to hold that low. Right, and go for a 1-to-1 first. Okay, and the move start rising aggressively, then you can increase your targets. Okay, that place and up to that place. Okay, what I have shown on the other charts, I mean on the dollar index, continuation. All right, so similarly you are watching a continuation on gold. Okay, so if we are wrong, okay, if things are not going to play out the way I'm showing, okay, still gonna be a tradable for the downside. Okay, but that's what we are not looking at the moment, as I said that. Okay, if I'm gonna pull out the KiwiCAD chart, I'm gonna look at that. All right, so KiwiCAD has taken out that 28 Feb high. All right, so DXY is still way behind that. Even gold is ahead of that. Gold is ahead of that. Okay, so yeah, so gold to catch up the KiwiCAD chart or yields chart. Continuation. Okay, if we don't get that, we are having another leg lower. As said on the other chart, this is still going to be a tradable for another leg lower. Okay, but again, go back up. All right, so what we are looking, by the way, this move, that leg all the way. So short-term continuation on gold. So make sure you keep your risk, reasonable here at the current price. Okay, don't over risk, reasonable risk, and yeah, you can see that we are selling at the top. Okay, we are selling at the buying at the top, right, at this area, top resistance. There's so many hurdles are there, so it's not a clear sharp trending market for upside. So it's a still sideways on a bigger weekly time frame. So you need to keep in that mind and not over risking here, specifically at current price when the move has already happened from the lows. So yes, there you can see that, okay, clearly. Why I said that we still can see another leg lower. All right, so this is what you need to keep in your mind, guys. So okay, what I said that we still can see another leg lower. Okay, this leg, all right, this leg lower still can happen over there. Okay, what that means is another leg still another leg can happen over there, right? This one more leg on all these charts. Again, on all these charts, one more leg still can happen. All right, we still can see this low. That's why my chart is, you know, showing that way. I mean, one more leg. All right, so one more leg still can happen over there. All right, so you have to keep that thing in mind. Okay, now where we see the indication for that move, there on silver we are having that indication. Okay, so silver is losing its value. All right, so silver is losing its value against the dollar, going back to that previous low. Okay, this previous low. Okay, my silver chart was same so in the previous weekly market outlook. We had that chart. Okay, this wedge. All right, now what we are having here, this move is happening over there. Okay, oh, let's just simply invert that. Okay, now and open that DXY chart on our right side. Okay, and that's what I was saying. And if that happens, it's tradable. Okay, it's tradable. We can trade, and that's what I'm showing you. Okay, this is the low on silver, and that's the high on the DXY. So very much same wedge. All right, similar wedge is just simply forming over there on the DXY. Okay, so if I'm gonna pull out the dates, all right, DXY was here when silver went higher. So let's just use that one, this place, and that high. All right, so we are going back to this previous low on silver. Okay, it means that we still can see another breakout here. Price still can visit that high, still can visit that high. Okay, so gold short-term buy opportunity not gonna work then. All right, so you have to understand that, guys. So now let's make it more clear now. Okay, and invert that chart. Okay, what silver is doing right now is going back to this previous low. Means that we still can see another leg lower. We still can see breakout of that, right? Still can see breakout of that move, and we can still visit this previous low. So we are having that lead at this area. Okay, this is the lead we are having. Okay, that can change. This is the only lead we are having. Okay, we cannot ignore that. All right, and the one more leg is still possible. Okay, and once that one more leg happens, DXY tests the top, or other pairs where I have shown, yeah, if they are going to test the top, still going to be a buy opportunity. What is the bigger picture? Okay, the bigger picture is the Kiwi CAD, and keep that in mind. We are heading towards the 28 December lows across the market. Okay, and pairs which are still going for another leg lower, testing the previous 13 February lows. Okay, you are again looking for those pairs to move away from 13 February lows to move towards the first February, or in longer term 28 December top. All right, so that's what you are watching. So we still can see another leg lower here on the XY and gold and all these, and once they test that low, okay, so you are gonna be okay. So if I'm gonna pull out the Australian dollar on that side, and we'll invert that on a 4-hour time frame. Okay, this is the recent low silver tested. Okay, so silver has removed those losses. All right, so up to 70% losses has been removed. Okay, so 70%, so 70% comes here. So we still can see one more leg lower on this, on the Australian dollar. That's why I said to you guys, tradable, okay, and we still can get a good opportunity, good sell opportunities on these charts. That's what I was saying to you, okay. What I have shown earlier, this trade, okay, this trade 1 hour time frame, all right, this 1 hour time frame trade is still intact, all right, as long as we see that the euro, test that previous high, this trade is still intact. And from that top, okay, if we visit this previous low, you are looking to counter it again from that top and continue to keep dragging lower. Hope that makes sense, guys. Okay, so if I'm gonna look at the different unclear chart, and we'll look at the gold with that, okay, and we'll look at the silver on my left side. Okay, let's remove that. All right, so and look at the gold on 4 hour time frame. Okay, what do you see here now? Okay, so early signs is appearing over there that the silver is losing its value. Okay, and we have removed those gains, okay, and coming up to 70%, all right, and 70% move still can happen. I have shown a buy opportunity over there, 1 hour time frame continuation trade. Okay, so do not ignore this sign. Okay, this is a sign that we may not get that move continuation trade. All right, we still can see another leg lower up to this previous low, and then again we're gonna have a longer term buy opportunity, on these charts, okay, for upside where the Kiwi CAD heading. So that the bigger picture Kiwi CAD heading 20th December still gonna intact, still gonna see. Okay, as I still have shown one more leg higher on the US yields, okay, US 10-year yields, if you remember that at the start, okay, on this US 2-year yield. And okay, one more leg still can happen over there. That can cause this one more leg, that can cause that one more move tone on dollar pairs. Okay, so keep that thing in mind. It's still tradable, all right, and also keep that chart into your mind as well. Okay, so silver was rising and gold was a buy at that time. Okay, so if we remove all those gains, these gains, all right, we still can go down, go another leg for higher on the DX. I mean, dollar can gain for another leg. Okay, so let's move to the oil. Oil very much same like last week, not much on this. Okay, so if things are getting better in the Middle East, some kind of truce is happening over there. Okay, if that, then break down that flag to the downside. Okay, and natural gas. Okay, natural gas, if you remember last week, I have made a decent analysis last week on the natural gas. Natural gas was a buy, if you remember that. Okay, and this area I was talking about, look for a buy opportunity. All right, and I was asking you to pay attention there, or new low. Okay, we did not see one more leg, and bang, the buy appeared over there. The comparison we used was the previous, okay, the previous lows here and this area, if you remember that. So still there. Yeah, this is what I have shown previously. Okay, so what happened? Let's move one side by side so that you can understand that well. Natural gas. Remove that 1 hour time frame. Okay, we have seen that much previously. So this is just for understanding, all right, so that you can understand that what you are looking for. Okay, so last week we had that. All right, so what happened over there? Another flag broken, then pumped up, right? So What happened last week? Flag did not broken out, held that and pumped up. All right, and then again price came down, pumped up again. All right, and this is what you are looking. So this is basically a sign that we are found its floor. All right, this is a sign that they found its floor, and flags are forming for upside. Okay, these flags are forming and popping up for upside. So it's simple now. It's easy to understand that what you are looking for on the natural gas. Okay, come close to the 160, 150, 155 areas, and you're searching these trades. All right, these trades. All right, or I mean, this trade has already happened. The next leg is just trying to happen. So nothing at the current price. 175 is not a good price. Okay, 175 is not a good price. So this was a good price last week. 158, 1.58 was a good price. So if I'll make it simple, yeah, and simply you look at these support areas. All right, so all these support areas are good to pay attention. You're gonna get a good opportunities on it, you know, like these kind of legs. So this is the chart to pay attention. This is chart. Just watch this chart, and you're gonna have so many good trades on it. Okay, watch this chart throughout the week. You're gonna have so many good trades. It's doing the way I was anticipating last week this chart to behave. It started to behave that way, and it can behave that way, you know, maybe for next couple of months, right? I mean, the longer the price gonna stay sideways, more opportunities you're gonna get. So 160 is a cheap price, guys. 160 is nothing, right? 160 is nothing. It went up to 140 when oil went negative. So you shouldn't expect it to go even below 140. Yeah, oil has to go into negative territory again. So this is less likely. So you're simply paying attention these support areas, all right, and looking for a buy like these. These are the opportunities. All right, so put your stop behind these the previous lows. If you get stopped out, let's say, let's say, you know, price, you know, you price come here and you get stopped out, right? Price come and you stopped out. Okay, let it stop out, double your risk again. Okay, I mean, let the price stop you out. Okay, double your risk again over there. I mean, you bought one lot over there, two lots, all right, like that. I mean, according to your risk, all right, according to your capital. So you can double your, I mean, once price stop you out, you can double your risk from the next buy. So keep doing that. Keep trading on this single pair. It can give you so many good trades for short term, all right, and even for longer term. So hopefully it will give you another support, all right, like it has done over there so many times. Good luck, guys. This is a good chart to watch. Put it on your top list, and support areas, when every time when it hits the support areas, buy that. And keep taking your, I mean, once price start rising aggressively, which I don't think so, we're gonna have that, all right, as the demand is faltering and the weather is changing, all right. So we may not see, you know, that kind of run which we saw last time, all right, at this area. Okay, or this yeah, so this is okay. Okay, this is what you are expecting for medium term, all right, it to go up to 250, or in best case scenario 3, yeah, 3, best case scenario 3, all right, or 220, 225. These are okay targets, all right. 225, 230, 250, these are 250, yeah, 250 is a reasonable target throughout the summer, all right. So a good chart to watch, yeah, good chart to watch, and you're gonna get so many good opportunities on this chart, all right. So check your margin requirements before you trade on this. Okay, you may have to pay more swap on that, all right. So some stocks are still a buy, all right, so some are still dipping. So NEO is a buy for longer term. NEO is simply a longer term buy opportunity. So it's keep getting cheaper and cheaper. 5 is cheaper. Okay, if it fall below 5, still a buy, longer term buy opportunity, all right. So we were expecting it to hold at $7 last time, so it is at 5.50. Yeah, so it's a buy, this wedge, all right. I mean, this is the wedge you are looking for longer term. So we are having earnings report coming out on 5th March on it. 5th March, I guess. Yeah. Yeah, 5th March. So watch that on 5th March. If, I mean, this chart is simply compressed by the Chinese inflation, nothing else. China is facing disinflation, and that's the reason this chart is just keep depressing to the downside. Once we're going to see that the jump in the Chinese inflation, this chart will automatically gonna go higher, gonna jump aggressively for upside. So if I'm gonna pull out the Chinese inflation on top of that, China is facing disinflation, causing that unsupported resolution. Okay, there we can see that the inflation, this Chinese inflation, is pressing this to continue to keep dragging lower. So the Chinese inflation in negative territory, and it is at the 5. So you can expect, I mean, if Chinese inflation go further into deeper negative territory, let's say 2%, all right, 2%. Let's open the Chinese inflation chart and see, what is the CNNIRYY. Let's see what was the worst back in time. So the worst was 99 2.2, negative 2.2 in 99. All right, and in 2009 crisis, the worst was 1.85. all right, and we are at negative 0.8. Yeah, so we can expect it to go further deeper. All right, but yes, 2.2 is negative. Yeah, negative 2.3 is the worst we can expect. All right, before we're gonna see the rebound. I think if we if we go back further, yeah, so I'm not sure, but what I guess by looking at the other, like US inflation charts, they went up to below 3, yeah, negative below 3. So it is still cheap, guys. So NEO is still cheap. You can set your, if you are a longer term position holders and traders, yeah, so you are paying attention at the NEO for longer term, yeah, and if it is not going to rise for big move or upside, at least you're gonna get that trade up to 12, all right, or up to 15, 16. So it's a longer term move. You are looking for a longer term move. You may not get that in the next day, all right. You have to hold your trade for longer term, all right. So if I'm gonna pull out my data range and look at this, okay, it took this move took 139 days, all right, 139 days. So yes, that's what you need to keep in your mind, more than 4 or 5 months. Okay, so it's a longer term position you are looking on this chart, right, a position trade. So keep that thing in mind if you are planning to, yeah, but opportunity is there for longer term this chart. Okay, AMD, we were expecting a buy opportunity on AMD, and we have seen a nice next leg higher on this chart, specifically after the, yeah, this is what we were having last week on it, AMD, yeah. So that flag to hold that moving averages, so it held that moving averages and went higher because of the Nvidia. So slightly changed, all right, this top, and if it gets down to that low support area to hold, all right, so short term buy opportunity again. Yeah, so previous, the previous trade during this trade has already happened during the Nvidia earnings. Again, if you have already that, then you are looking it to break through and continue to keep pushing more higher. Yeah, if not, then you're expecting it to go down and test that support area again, or moving averages again, and looking for, yeah, so this next leg to happen. All right, that next leg to happen. So still a buy, okay, but Apple is at a much better place. All right, Apple is at a much better place. So still struggling. Okay, we are expecting it to break through the previous top. All right, and still holding that support area 182. Yeah, so we may get a good nice next leg higher over here on this chart. So what you are looking for, this leg, this kind of leg to happen over there. All right, so this support to hold. If I'm going to pull out my US 100, okay, US 100 is a Nasdaq 100 index chart. Okay, now we can see that the Nasdaq 100 index chart has clearly broken through the previous high and gone above the previous top. Okay, but Apple is not catching up that. Today might be a good clear sign, okay, where you can see clearly. So there we can see that it's not showing what I want to show, right? So let me open it side by side. Nasdaq 100 index. So Apple is lagging at the moment. Okay, so we can see clearly that the Nasdaq 100 index has broken through that high. So cross line this top. So 16,000 has been broken out, but Apple hasn't broken out that high, the 198. Yeah, so clearly the all right, so we got a correction, over there. All right, then what we got a breakout for next leg, all right, so Nasdaq 100 index is still gaining because of the Nvidia and other tech stock, but Apple is went into a daily correction. Okay, we may get a good buy opportunity over there for this to test that top or break through for next leg higher. Okay, so Apple 180, 182 is a good spot for short-term buy opportunity, which can extend up to at least up to 200, or in best case scenario 220. All right, so in best case scenario 220. So it's a daily chart, and the short-term opportunities can also take place over there during the New York session, okay, or in short-term opportunities over there. So in best case scenario, you are looking for, these lows, all right, so these previous lows to hold, and medium-term trade, all right, this target, or in best case scenario, you're looking for this whole complete bullish leg to happen over there, which can extend up to 220. All right, so if we're gonna use that, and the next extension, up to which level we can expect the Apple to extend. So Nasdaq 100 index, it's a daily chart, right? So Nasdaq 100 index has gone for right, so it has gone beyond 188, which means that 230 in sight. All right, so 230 in sight. So we can see that Nasdaq 100 index extended more. Okay, we were extending over there at the same time Apple was in daily correction. So 230 in sight, 220, 230 is in sight on Apple. Okay, if not 230 all right, then at least up to 200. All right, so at least up to 200 target. This previous high, yeah, this previous high 200 target. So Apple, you're paying attention on Apple. Apple is compressed, all right, caused by the US court. All right, so you remember the watch caused that to drop. All right, so Microsoft also went higher last week. We were talking about this support to hold, okay, and the arrow. So same again, okay, if we test that low during the week, all right, so this leg already bounced off from the low. We held the moving averages, which we were talking about the last week, 4-hour time frame. We held that and we bounced off from those lows. All right, so yeah, so just continuation for another leg, and let me pull out in a different way. A flat formation, very much similar like we had on Nvidia or on others. Okay, so continue to keep pushing higher for another leg like this. This is what we are having right now, a flat formation. So break through the top or fall back for another leg lower, hold the moving averages, and then continue the trend. So Nvidia, if Nvidia pulls back, so Nvidia pullback gonna stay a bullish buy opportunity simply, all right, for short term. So much money has been added, to be honest, within these couple of hours. I wasn't expecting that, but so much money has been added on Nvidia within these hours, So if you see a pullback again on this 4-hour time frame, it is a buy opportunity simply. So go with the trend. All right, so go with the trend. So yes, we go with the trend. Okay, if we see another fall, another 4-hour time frame drop. Okay, that was the flag, a flat we had on other pairs. Okay, so we held that. Simply it was very, very aggressive. So for short term, if you're looking to day trade, okay, so when market open, pay attention at that previous support areas for short term buying within these ranges. Okay, these ranges from 780 to 800. All right, so volatility is extreme over there, so make sure you understand that volatility is extreme over there. During the New York session, price can hold the 780 and can have, I think the opening price is let me check, where is the opening price? Yes, opening price is 796. So it's already hitting the 800. All right, so it's already hitting the 800. Yeah, the opening price is 796. So but if it comes to 780, yeah, 780, watch that support area to hold and go back up to 800 for short term. All right, for day trading, for day setup. Google also very much similar, like 4-hour time frame support to hold. Google is slightly weaker, we can say that, right? Google hasn't gone higher, so let me pull out moving averages. All right, so yeah, if we're gonna get the next leg higher on Apple, all right, so we obviously gonna get a next leg higher on Google too. So these support areas to hold. All right, so these support areas to hold and give us that next leg back to the top. Amazon, very much similar like the Nvidia, also done that move. All right, so we had that flat which we were talking about last week on the indices, Nasdaq 100 index. Yeah, so I mean that next leg has happened already, one more up move. So if we get a pullback again within the trend, okay, so still stay trending. All right, or let's just simply expand that into an expanding triangle formation. So if we see another leg lower, right, and test the support areas, okay, and then again stay trending. So earnings are far away. Earnings gonna be in April, 25 April, so far away. So hold that support area. Okay, Meta also did that, one more leg higher. Okay, but it didn't hit the lows. We were expecting it to hit the lows last week and then go higher. It just simply went higher. Okay, so very much same again, same support area, and if it tests that, then stay trending for next leg higher and continue the trend. Okay, so now we're gonna have optimism that rates gonna go lower. That gonna cause the indices to stay intact for upside. Okay, so Tesla, my longer term projection is that the Tesla gonna catch up. Tesla is still very weak, all right, and Tesla gonna catch up and gonna remember the Tesla was also a bubble like Nvidia. Everyone was just buying the Tesla, remember? Yeah, when Tesla was rising, everyone was just saying buy Tesla and blah 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 blah. And what happened after that? Crash. Okay, so that's what going to happen with the Nvidia, all right? So Nvidia is simply a bubble. So Tesla was also a bubble, all right? Now you know that it was a bubble, okay, and dropped, went up to 100, and now trying to catch up that move. So similar thing you're going to see on Nvidia. It's a matter of time. So don't over risk when the move has already happened. But on Tesla, still bullish, all right? So Tesla still bullish, same move, looking for this, like I have shown in the previous weekly market outlook. These lows, you're paying attention at 180, 190, these areas, and looking for 185 and looking for it to hold and go back up. Netflix also gone higher for the 4-hour time frame, broken out. Again, not much. Fall back into the 4-hour moving averages in bullish. All right, so fall back in the 4-hour moving averages, hold the support areas, and stay trending for upside short-term buying opportunities. These areas. All right, so on Bitcoin, let's look at the Bitcoin and finish that. Okay, Intel. Some of you people are looking to buy the Intel. Okay, so Intel can play a catch-up move, right, to the Nvidia. All right, so the question is, who's going to be the next? Who's going to be the next to create the AI chips to compete the Nvidia? That they're gonna rise. Okay, their share is gonna rise. So yeah, so if Intel is going to be the next, or AMD is also catching up the Nvidia, right? So AMD is doing much better than the Intel, right? But if AMD is going after the Nvidia, right? So AMD, I think I was showing a buy opportunity on Nvidia way before AMD. Sorry, AMD was a buy. So AMD is basically catching up the Nvidia. Okay, so who's going to be the next competitor who can compete the Nvidia? Their share is going to blow up. AMD. So there. Again, there we can see that the AMD is catching up the Nvidia. Okay, there where I was showing a buy opportunity there. Okay, there where I was showing a buy opportunity. So the AMD is catching up when it was at 55. It can catch. Nvidia is catching up. It is at 182. All right, and still got a lot of potential to. All right, so 55 was there, and the next leg is just simply appearing over there, and Nvidia is at running at $800. So still gonna be a play out over there. So AMD, yeah. So who's gonna be the next AI chip creator? I mean, who's gonna be the next? So AMD is doing better as with compared to the Intel. All right, AMD is doing better, but there is a chance that the Intel also can play a catch-up move like like we have seen on the AMD. All right, and that's what I'm showing. Yeah, so Intel can also catch up and can go all the way back to that previous high, all-time high. So daily chart. All right, so the daily chart, and all these corrections should be watched very carefully. All right, all these lows should be watched very carefully. Those were the previous lows, and price held that trend. Okay, now this should be watched carefully. Okay, if I'm gonna remove that and gonna pull out some, you know, trend line over there. Let's just simply use a support over there. All right, so you're paying attention on this support area. So if I'm going to pull out horizontal ray, okay, and you are looking for that trade. All right, you're looking for this trade first. All right, and in best case scenario, this leg to hit that top, or in, you know, further best case scenario, then go all-time high. Okay, so you catch up to Intel to catch up AMD. You see that AMD is hitting the all-time high and Intel is still lagging, so we may see a catch-up move on Intel. Intel can play a catch-up move. Okay, so you're paying attention on all these daily pullback. This is a longer term trade, all right? This is not a short term trade. Longer term trade can play out up to 110, right? So that's what you are paying attention, guys. So earnings are there. Earnings coming, I guess, in April. Okay, we had earnings 25th of January, and earnings were positive, but it dropped. So yes, Intel, yeah. Intel is a lagging behind the others, so can play up catch-up move. So you're watching it. All right, so let's look at the Bitcoin, and then we're gonna finish Bitcoin. I said that I will update the crypto last week. Yeah, I didn't get enough time to record, you know, or update my charts. So I will try my best to update my, you know, crypto charts, and we'll talk about that. But so far on lower time frames, simply you are bullish. Okay, on all altcoins you are bullish, and on Bitcoin there is still a big daily correction is set to happen. Yeah, so in the previous week, previously we were expecting a big drop on it, all right, and this to go down from there and to all the way up to 35. Okay, and then in the previous weekly market outlook we were expecting another leg higher possibility. Yeah, this leg higher, if you remember that. So we got a next leg higher. So right now, you know, I simply can you know, tell you that in a one word, the charts which are not testing this high, okay, this date, 16th March top, all specifically the altcoins, and which are having very much similar structure like Bitcoin, okay, there are the potential, there is the trade. All right, so if we see that the Bitcoin is going to hit the all-time high, all right, then all-time high at 70, yeah, if it hit that all-time high, then those coins, they can rise so aggressively, and your first target going to be that 16th March top, right? And let's suppose I'm gonna pull out the Cardano. Okay, so Cardano, we don't have much potential on Cardano or ADA, all right. Okay, but still we can see that the ADA is still close to the floor. Okay, we haven't gone higher, right? So ADA is still a buy opportunity. Okay, up to the 16th March high. I mean, the price going to be at 122. So, but the potential is not, in terms of percentage, the potential is not big enough on ADA. All right, so we can see only, I mean, let's just open side by side where we can see. Let's talk about the current time frame and then we're going to go to that. Okay, I mean, you are looking simply a short-term breakout for upside. I will look at that to XRP. Okay, so short-term, one more leg. So when you are buying that, guys, make sure you are buying for short-term only. All right, this is not a longer-term trade. Okay, just trade based on the support or with the current trend. That's it. Okay, there is no indication at the moment we are having that the Bitcoin gonna break out and continue to go for the next leg higher. This is not a perfect, confirmed opportunity. Yeah, just based on the structure, pattern, and indicators. All right, we don't have a lead simply yet that the Bitcoin is gonna break. So it's just a short term, one more leg higher. All right, and there is a possibility that the Bitcoin can fall back again for a bigger pullback. All right, this bigger pullback like that. So you have to keep in your mind that still can happen. So just a continuation trade with the previous trend. All right, so what was the trade? What was the chart? I said when Bitcoin was rising, the Ethereum is catching up. Okay, so Ethereum was a buy. Where I was talking about at this place, unfortunately it didn't test that low. It didn't test this previous floor. I was talking about this area for buy. Okay, we are having a huge move over there since testing that 2023. All right, so $700 move has happened over there. More than $700 move has happened over there on Ethereum. So Ethereum was a good opportunity in terms of let me check that before I'm gonna comment on. In terms of percentage, let's check the percentage. So we have seen 43% rise, and we have seen 37% rise. Almost same. Okay, we can't say that $14,000 move and a $900 move. Right, so almost the same. Okay, but yes, there is a slight lag on the Ethereum. Okay, Bitcoin moves first, and then we see that the Ethereum, moves later on, and that makes you confident to buy to increase your risk. So the point which I was talking about over there is the let's open that. Okay, so I want to show you the potential. Okay, you need to understand where you should play out. All right, you need to understand the potential. Okay, and trade accordingly. All right, so I'm gonna look at the ADA. ADA is not having that much potential, but there are many other coins. So I will, as I said, we will have a detailed analysis and weekly market outlook at some point, just on the coins which are having a huge potential in terms of run, as long as you see that the Bitcoin is running. Okay, so 16 March high, 28 March high, and the 28 March high comes here. Okay, this is the minimum target. This is the minimum, the altcoins need to tag. Okay, why minimum target? Because we can see that clearly that the Bitcoin has gone through that March high. Okay, the next target is the all-time high. Yeah, so minimum is these altcoins need to catch up is the 28 March high. Okay, and when we look at the potential, okay, the potential is only 114% move potential is over there. So this is not a great potential over there, guys. So 100% potential is not much. So we were expecting Cardano to rise from there. Okay, so we're still expecting Cardano to continue to keep rising from that low. Yeah, so that chart. So we are having other altcoins which may be not so popular, but we can get more potential on them. All right, and this is where where I will talk about that in details next time. So waves, let me pull out more. Yeah, something. Right, so Rose is also pushing higher. So this is the 16 March. All right, so this 16 March top is there. Let's check the potential. This is what you need to do. You can do that by yourself. Whatever the coins you are trading, all right, you just find out where is your March high on all coin which you are looking to buy. Okay, this is the March. All right, so 28 March. All right, so the 28 March comes here. All right, 29. So exact, I'm not looking at the exact date, just you can see that formation simply, guys. Okay, this formation, this pattern formation on all coins, simply this formation, you're gonna see that. All right, this ABC move, you're gonna see this ABC move. All right, and the date, you can find the date there. Okay, so this is the, so you're gonna see that formation on the most of the all coins which you are planning to look for buy. Okay, what you need to do is just simply look at the potential. Okay, from current price, how much percentage rise we are having from at this area to that. Okay, look at that. This is showing that it has the potential to rise up to 230%. Okay, which is a good. So some of them are having 800%. All right, some of them are having 8% potential. Some of them, I mean, they are still close to the floor. Some of them are having 700%, 400%, 500%. That's the point which I'm talking about. All right, and that's what you need to look for. Okay, this coin is 200%. Most of these coins which are sitting over there are having two above 2. Yeah, this is having 400% looping up to this area. If we get a move up to this area, yeah, so 400%. Let's look at the avalanche. Avalanche is on its move. All right, and yeah, 200% move. Avalanche is an expensive coin. All right, so NEM. There's a minimum move you're expecting that on these old coins. So 250. Wet V chain is already on the move. Okay, so 30 or 28 March highs, and that was the previous flag. Okay, so 250% rise. All right, so this is already moving. All right, so 130%. So some of the coins are having decent potentials. So whatever the coins you are buying, just check coins randomly. What you need to do, you just need to correlate that chart with the Bitcoin. Okay, if those charts are moving exactly the way Bitcoin is moving, all right, there you are looking for a potential move for upside. Okay, so that's a simple analysis. All right, as long as you see that the Bitcoin keeps pushing higher, those old coins gonna also jump at some point. All right, so that's it. Enough for the week. Enough for this week, guys. And hopefully you got the XRP. Okay, so let me look at the XRP. XRP gonna be the same. Okay, so I have given you a trick. You can do that. RP. You can do that by yourself. This is 28 March high. All right, so XRP is still not, it's not different, all right, but the potential is not there. It has already tagged that. Look at that, it has already tagged that. Okay, so it has already tagged this 28 March highs there. Okay, but look at the potential. The only potential you're gonna get 87%. All right, so 87% is the potential you're gonna get from XRP. So I think you understand that now. The way I have explained to you, Bitcoin gone above that 28 March highs. So you should choose those coins which are highly correlated to the Bitcoin. Okay, moving exactly the way Bitcoin is moving. and check those coins if they are having potential like 400, 500, 600, all right, or at least 200-300. Okay, so pick those coins. All right, so you're also going to see, coins which are sitting at the floor and completely dead. All right, they may not move, for the next cycle. They may not rise for the next cycle. So don't pick those coins. All right, so you have to choose those coins which are highly correlated with the Bitcoin, moving exactly the way Bitcoin is moving. All right, and having potential somewhere around 500, 600%, all right, or 800%. Pick those coins. Okay, so XRP is a simple, expecting it to just move higher, but look at the potential. Okay, so you have to consider that potential. You're not gonna get, potential, good potential on it. And if you are thinking that XRP is going to rise for a very big move, something like other coins, and going to $3, $2, $500, all right, right now I don't see, all right, okay, because the supply is huge over there on XRP. You need trillions of dollars to come into the XRP market, market value, which can cause that to go higher. So I don't see that is going to happen anytime soon. What I see is that we're gonna have mirrored move, and that can go up to at least up to this area, at up to $1. Okay, or in best case scenario, you can expect that to go all the way up to 2. All right, if Bitcoin hit the all-time high. All right, so be realistic, all right, rather than unrealistic, and target that 95 or 90 area or that next leg higher. Okay, so that's it. Thank you very much for coming for spending your time with me for Monday. Mostly people are not free on Monday, so thanks. All right, and we'll see you back. I'll try my best to post a updated analysis on the coins, okay, which are having more potential, like 500, 600 percent potential. Okay, so thank you guys, thank you for coming. Enough for the day, for this week. We'll see you back again in another. So follow me over there on TikTok so that we can have live streams over there as well in coming days. All right, so follow me over there. So Wave Trader, thank you, and we'll see you back again in another weekly market outlook. Until then, bye.